OpenAI technology that went rogue and hacked another company. We're going to tell you all about this when Squawk Box comes right back. Company. We're going to tell you. New update on a story we've been talking about for over a week now. OpenAI says that the rogue AI agent that breached Hugging Face's platform also hacked multiple third-party accounts as part of that attack. In an updated blog post, OpenAI says that a review of the incident revealed 4 accounts that were tied to publicly available services were actually used by the AI agent as part of a larger effort to hack Hugging Face, meaning it hacked all of those other places first. The AI agent found credentials that had been exposed on the open web and used them to break into the accounts. OpenAI did not name the third-party providers involved, but New York-based Modal Labs said that one of its customers was among those hacked. Modal's chief technical officer said its customer published an unauthenticated endpoint that allowed anyone on the internet to use their sandbox for code execution. It was then used by the rogue AI agent. He said Modal's platform was not compromised in that attack, so it's kind of complicated, but Modal was hosting this other third party. The third party put out something that basically left the door open to the internet, and that's how the agent was able to get into its sandbox, that third party that was hosted by Modal. But we haven't heard the last of this because OpenAI is saying that there were 4 other places that were exposed on this. Again, you come back to the idea of how wide-ranging this was. They didn't know, OpenAI didn't know, they say, until after it had been figured out at face hugging and that they had actually contacted the FBI.
Hugging Face.
Or Hugging Face, sorry.
Oh, Hugging Face. You don't want to mess with Huggy Bear. And when he finds out that this happened,
He's going to be upset.
He's going to be upset.
Hugging Face, I've seen some stuff that basically has the alien planted on your face.
That's what it sounds like, doesn't it?
Yeah.
That wasn't a good outcome.
No. No.
Is that guy's name John? Yeah, he finally passed. Coming up, an increase in gifts of private company shares to charities. We're going to talk about what's behind it and whether it could signal some peak valuations. Robert Frank has that story. But first, as we head to break, here's a look at yesterday's S&P 500 winners and losers. The AI boom sparking a surge in gifts of private company shares to charity. Robert Frank joins us now with more. Hey, Robert.
Good morning, Joe. Good to see you. Well, donor-advised funds have quickly become a favorite of charitable givers. Assets held in so-called DAFs are now over $320 billion. That's nearly doubling since 2020. They allow donors to give money or shares to a fund, take an immediate tax deduction, and recommend grants or charities over a longer period of time. Now, the AI boom is creating a new surge in donor funds, especially using private company shares. DAF Giving 360, that's the nonprofit affiliate with Charles Schwab, said 3/4 of all gifts to DAFs this year were non-cash assets. That means private and public shares, stock, art, real estate, and other assets. They said appreciated shares in private tech companies have been an especially large driver with growing IPOs.
The IPO activity that we've seen is creating wealth, moments for people, often in their peak earning years. And so, they're looking for ways to, I think, make an impact with the money that they suddenly come upon.
The windfall from all those donations resulted in $10 billion in grants over the past 12 months. That's up and a new record from 22% last year. For more on how the AI boom is driving DAFs and the best strategies for giving right now, you can sign up for the Inside Wealth newsletter out tomorrow morning at cnbc.com/InsideWealth.
Are you still working on what can happen with the Trump accounts? I mean, where does that stand now? Can you give shares? Can they go in like that? Can people give it? I mean, Michael Dell did it one way, but can the SpaceX lady?
A little unclear, but what's interesting about SpaceX did not allow people to give their private shares even to DAFs, whereas OpenAI and Anthropic are allowing people, making it easier to give those shares to DAFs. So, DAFs make it better because you can both value things that are private, companies like, Schwab, Vanguard, all these, Fidelity, they have entire teams that can value things, and also they can figure out how to provide liquidity. So you're giving more to charity because you're not selling something, paying the capital gains tax, and then giving it to charity.
I didn't look at the whole list. Are you on it? You got problems?
There's like 960, you're talking about the list of people that supposedly have pied-à-terres in New York City.
Yeah, rich people.
They publish this list every year,
people.
Joe. They publish the list every year.
Yeah, but now they're in trouble.
It's a subset of a list that they publish every year.
But no one ever looked at it. Now you can find...
By the way, people like King Griffin are not even on the list, but whereas 960,000 apartments are, it's going to be about 10,000 to 12,000 apartments that are actually subject to the tax.
I looked at it yesterday. It's no different.
Robert's not on it?
No, well, it's no different than the tax rolls in any of the
Exactly.
towns that I have.
It's
property
published
taxes.
every year.
You can look it up by
Published
last
every year.
name.
This whole idea that it's doxing is ridiculous.
They posted 4 pages, New York. Yeah, if I say the Post, I mean New York Post. But they posted 4 pages.
I actually looked it up because I was so interested based on their coverage, and I'm like, this is the same thing that I can look up on any.
You wanted to see if anyone you knew around here was on.
Well, but I was going to look it up and check it out. And I'm like, this is the same tax, like public tax rolls.
The risk is not that people are doxing people that have been on tax rolls every single year.
They're doing this
the
so you
risk
can find out
is
if you're
that
accidentally.
People are getting letters
that
A, either live here full time, or B, don't have apartments that fit the valuation metric, which is it's got to be based on a valuation of the city, 1 million or more value. And there are people with assessed values or market values of less than $1 million that got letters.
And you can correct it if you go in and check it on these tax rolls. There's also a place on that same thing where you can say, you can challenge the letter that you've gotten. That made more sense to me when I actually looked at it.
And you've only got until August 20th to challenge it. And a lot of people who are in this category are away for August. So this is going to be a mess in terms of people getting letters that weren't supposed to be subject to that. Much more than this whole doxing list thing, which is published every year, is this issue of people getting letters that shouldn't be subject to the tax, either based on valuation or the fact that they're full-time residents here.
Why can you only challenge it till August 20th? That's ridiculous.
That's what they've said the rule is.
Okay, that's the most ridiculous thing I've heard.
It will be one of many that you'll hear.
Well, we don't have to worry about this.
Because we don't live in New York City.
Look, we can't get any good, like, Chinese food delivered. That's, what else?
I can.
Yeah, you can. Yeah. So that's not even. What else you got for me here? Can you park? Without
for $800 a month,
yeah.
you can park.
Have you seen a tree lately? You can step in dog do.
Got a bunch in Central Park.
You can step in dog do.
If you step over the guy sleeping in your doorway. All right.
Thank you, Robert. When we come back, the controversy over powering AI data centers, we will speak with the CEO of generator giant Generac. The company also just reported its second quarter results just about 35 minutes ago. We will talk through those results with him and get into this idea of what's happening in the commercial and industrial space that has been so strong for them. Also, a reminder for you folks, you can get the best of Squawk Box in our daily podcast. Just follow Squawk Pod on your favorite podcast app, and you can listen anytime. We'll be right back. All right, welcome back, everybody. Generac reported second quarter results just earlier this morning, just moments ago. Earnings came in at $2.91 a share. That was much better than the $2.01 a share that the street had been anticipating. Revenue was $1.17 billion. That was slightly below the consensus, but the company is maintaining its full year 2026 net sales growth guidance of mid to high teens % range. That stock is now up by about 5.5%, and joining us right now for an exclusive interview on the numbers and especially how he views electricity issues surrounding AI data centers is Aaron Jagdfeld. He is Generac's chairman, president, and CEO. And Aaron, welcome. It's great to see you this morning.
Thanks for having me on, Becky.
You know, when we first started talking to you years ago, Aaron, you were really a residential story. This was about homes that would make sure that they had a generator added on so that they never had a disruption in power. And it was pretty powerful during all of the storms that we've seen, and I was thinking a lot about that. But your story has really morphed, and the real growth is in the commercial and industrial areas right now. And that's largely because of the growth we've seen with data centers. How have you all dealt with kind of that change over time? What are you doing, and what do you see happening right now?
Yeah, it's really been something. I mean, as you said, our company's been around since the late 50s and always been very focused on the residential market, the consumer. We've kind of a consumer brand that way for backup power. And we've always had a commercial and industrial effort. It was smaller, but a decade ago we made a number of pretty big moves to beef that up, both internationally as well as domestically. And today we've put ourselves in a position to supply larger backup equipment to all kinds of major commercial and industrial types of customers, hospitals, cold chain distribution centers, and of course data centers, which over the last few years, certainly the last 12 months for us, has just been on a tear, and underpins a lot of what we're talking about in terms of our results this morning and about where we're going in the future.
Let's talk about those results. The residential segment actually saw net sales drop by about 2% to $617 million, but the commercial and industrial segment saw sales jump by 29% to $556 million. So you're still mostly a residential company, but that gap seems to be shifting pretty quickly.
It is. We used to be about 65% residential, 1/3 CNI, and we're closing in on more of a 50-50 balance, which we think is a healthy mix anyway. I mean, the residential business, as much as we love it, as you mentioned before in your opening remarks, it is dependent on kind of exogenous events and with the weather events and things that happen, and so it's a little bit outside of our control sometimes. We're always there for our customers when they need us, and obviously we're there for customers who want to plan for those types of events. But the 2%, kind of being off 2% in res this quarter, a little bit flat. There just haven't been a lot of outages, right? We didn't have a great hurricane season last fall in terms of outage effect, and of course our residential business gets impacted by that.
Which the rest of us were grateful for.
Right, everybody, exactly, and of course everybody needed a break on that. It's been obviously a pretty busy set of years there, but we're ready to serve on that side of the business. It's still an important part of our business, but there's no denying what the impact of data centers is going to have on this company and really providing a better balance for us overall.
How did you make the decision a decade ago to really beef up that commercial side of the business? Because nobody knew about AI data centers at that point. What did you see that made you think it was worth it?
Yeah, and we didn't either, by the way, just for the record. We didn't see that coming necessarily, but again, we had a kind of burgeoning commercial and industrial business. We knew that just like homeowners, businesses need to protect their inventories from outages. They need to protect their revenue streams. And we saw growing level of interest in commercial and industrial operators in protecting those operations. And so we made the decision to go down that path and to expand our offering and to expand our presence globally. It is more of a global market for commercial and industrial. The residential market is uniquely U.S. based because of the power constraints and power quality issues we have here in the U.S. specifically. But on the commercial and industrial side, again, it may be better to be lucky than good sometimes, but the data center opportunities that arose, are really relatively recent, and certainly the trends are bigger than anything we would have planned for even a decade ago.
Aaron, we talked about you maintaining your full year net sales growth guidance, but you did raise guidance in a couple of areas. I think net income margin, you're now saying 9 to 10% versus the 8 to 9% that you had anticipated for the full year before. And then when it comes to the EBITDA margin, you're looking at 20 to 21% versus 18.5 to 19.5 that you'd previously guided for. So what are you seeing that is making you raise guidance in those two areas?
Yeah, full disclosure, a big part of the raising guidance is the tariff refunds that we got, that everybody got,
Okay.
the IEEPA tariff refunds. That's part of it. And then obviously we're getting increased leverage based on the top line growth that we're seeing. This shift into commercial and industrial, the gross margin profile of those products is lower than our residential, but our residential products are unique that way. But again, I think it's more about, if you think about 2027, we booked over $1 billion worth of new orders for data centers, specifically for data centers in the last 90 days. And that kind of pace it's unlike anything we've ever seen before. And I'm sure other companies who are serving the data center market with kind of the hard infrastructure that's needed, right? You've got the cooling and chiller packages, you've got the racks themselves, you've got the backup generators, the transformers, all of the hard infrastructure for data centers. You're seeing that ripple through all the companies that kind of supply those parts and those pieces. And it's stunning, really, just to see the speed at which it's growing.
$1 billion that you've booked in new orders for data centers in the last 90 days. I mean, your
Correct.
stock is up 51% year to date, but it is down over the last month, just like anybody associated with the build out of any of these data centers. There have been some questions that have crept into the street about whether that growth is real, whether it can continue. What would you say to people who have concerns about that?
Yeah, all I can say is I can share what we've talked to, the planners, developers, and the hyperscale, data center operators themselves. And the planning cycle that they're looking at right now, they're planning out to 2030, they're planning out to 2031, 32. And so, that doesn't necessarily mean it'll happen, but the planning is in place. The developments, development takes a long time. So these developments are underway in many cases, and the capital is committed or being raised today. And sometimes that's some of the negative impact that you're seeing in the markets with respect to the amount of CapEx that needs to be outlaid for the build out here, right? I mean, this is a massive build out phase. But all indications are that at least for the next 5 to 7 years, and maybe longer, that this build-out phase is going to take place. And that, again, back to the hard infrastructure needed to do that, the actual construction of the buildings, the construction of the equipment that goes into those buildings. That's a cycle that feels like, at least the next 5 to 7 year cycle.
Aaron, I want to thank you for your time. It's been a while since we've gotten to talk to you, but we appreciate it.
Yeah, thank you again.
Aaron Jagdfeld with Generac.
All right, coming up, turmoil in the world of soccer over FIFA's plans to bring in outside investors. That's next. First, though, the AccuWeather forecast with meteorologist Bernie Rayno.
Heavy rain this morning will cause flooding in the Hudson Valley around Albany. Your AccuWeather forecast shows some rain in Boston, spotty shower thunderstorm New York City, Philadelphia, Washington, D.C., along with much of the Midwest will be rain-free. Hot in Texas. Nice day in Los Angeles, although warm at 87 degrees. Travel delays, Boston, New York City, and Philadelphia. AccuWeather for Business delivers proven superior accuracy with often earlier site-specific warnings that reduce false alarms and costly disruptions so your business stays best prepared. Visit business.accuweather.com.
Trouble in the world of soccer. Less than 2 weeks after the World Cup wrapped up, reports say sports governing body in Europe is considering boycotting the World Cup over new plans from FIFA to bring in private investment. Separate reports say that the European group wants to hold an emergency meeting with its 55 member associations this week. This follows news yesterday that FIFA is planning to create a $20 billion subsidiary to run the World Cup and will offer 20% stakes to outside investors. According to a press release, Thrive Capital, which was founded by the brother of President Trump's son-in-law, Jared Kushner, would be involved in that deal.
This is a big deal.
Really?
UEFA, yeah.
Almost
UEFA,
like a goal?
Correct. UEFA has boycotted in the past. Back in 2021, FIFA wanted to host the World Cup every 2 years. UEFA got all of its members to boycott and say they weren't going to do it, and that shut that plan down. So if this group goes ahead with the same thing, I think they have 55 members, some of the most important and most winning teams that are out there, some of the highlighted names. Their point is it's not FIFA's to sell, and then if you really want to dig into what they meant by that, they made another statement that said the soul and governance of football are not assets to trade, especially with zero transparency as to who gains financially. In other words, if you're going to sell us, we want a bigger stake of this. And I think FIFA has talked about giving them a little more money from $8 million to $20 million to $22 to $24 million. But $12 billion is what FIFA raked in on this World Cup. So it's peanuts when you talk about what's coming in and out of that. All right, when we return, where investors will put their focus when Meta reports earnings after the bell tonight. Squawk Box will be right back.
It is 7 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kernan, along with Becky Quick. The futures this morning, surprisingly maybe, well, now the NASDAQ is down. But we had some serious tumult in South Korea, obviously with SK Hynix and the averages the last couple of days, the index there the last couple of days. The NASDAQ was, what did it open down? About 300 or 400 points. Yesterday closed down 50, down another 70 today. But now the Dow down about 150 points.
Meta is set to report earnings after the bell, and joining us right now to talk about it is Michael Nathanson. He is the founding partner and senior research analyst at MoffettNathanson. And Michael, let's talk about what to expect from Meta after the bell. Mark Zuckerberg is engaged and playing in this AI battle. What do you think of the effort so far? What are you anticipating after the bell?
Yeah, good morning, Becky. He's definitely engaged. We would say this, where he's engaged on the ad side, you're seeing great results, right? Ad revenues are, last quarter were 32%, expecting another super quarter on the ad side. The benefits of AI are coming through. I wish I could stop there. The questions that people have is where the other spending is going and what the returns will be, right? So he's investing a ton to build super intelligence, meta AI. We're all not really sure what the roadmap looks like, what the payoff will be, and that's why the stock's been under pressure the past year, right? So if you stopped at the ad side, they've done great, but the other spending is really hard to pin down and hard to prove out at this point.
Is it looking like a redux of the Meta transformation, just when they spent all the money on the metaverse?
Yeah, it's funny. So we have a buy on the stock, and I'm balanced on this, right? So the Reality Labs investment on metaverse has not worked out, right? And they've been penalized for that. But previously, whenever they've made a big pivot, it's worked, right? So the market has given them a lot of rope and given them the ability to kind of transform. The last example we have was the metaverse. They also did the Reels transformation at Instagram. That's worked out great. So they do have the benefit of doubt here, but I do think on these earnings calls, they need to do a better job of kind of building the case for why this is working, right? And you're right on Reality Labs, that's not worked. We're all waiting for some more proof points here for the Meta AI bull case.
Well, just to play devil's advocate with that, look, the metaverse never sounded like something that was real, at least not to me, but AI is a different story. This is a game, it seems like everybody's got to be in it.
Yeah, I agree with you, Becky. Like, I remember talking about the metaverse and almost joking about this idea, right? It was kind of crazy, but $80 billion later, that's where we are. But yeah, it's hard not to see the benefits of AI. And again, if you look at their ad results, they grew 32% off of a massive number last quarter. And you're seeing it in all their metrics, right? So they have the ability to really monetize this AI investment in ads. And I don't want to, and this is what people did 3 or 4 years ago. They actually started to get too negative right at the bottom and dump the stock. And I do think they've proven over time to be great executors of strategies, and let's just see where this is playing. And to your point, AI is certainly real when you see the results at Meta.
Mark Zuckerberg has gone pretty public, at least in print media, and has all these comments he's making right now talking about how closed AI systems are a huge problem and are basically anti-American. His point is, throwing some shade here at OpenAI and Anthropic without naming them, but saying we need more of the actual open artificial intelligence plans. It's a huge debate that's taking place in Silicon Valley right now. There's a lot of frustration with those closed AI sources. But then you get into the idea of how much would we want the Chinese OpenAI models to be playing? Is there a security risk? Is there a national defense issue with any of that? How do you see this, and what do you think about Mark Zuckerberg's take on all of it?
Yeah, I'm struck by that too, Becky, right? Well, it's like, hold on a second, we want to open up, the U.S. to Chinese models, right? At the same time, you've had CEOs of companies come on your show and complain about how people are misusing their data at the closed models. So I'm I'm a bit confused. I know why some of the CEOs of the non-Anthropic, non-OpenAI companies are pushing for this, right? They want to level the playing field. They want to eliminate the risk of having the regulators create teams with those two companies and saying, look, you need to basically be closed. I get it. But I think we really need to think, really long and hard about, do we want to follow a model where it's open and the Chinese are showing us the path forward? I get it. They're doing it more cheaply. They're doing it more quickly. But I think security and compromising data is a huge question mark here. And I think this is one where really going more slowly and trying to think through all the ramifications makes sense. But I get why Zuckerberg's pushing this and all the other CEOs are pushing this too, that are not part of Anthropic and OpenAI.
Yeah, somebody on Twitter called him a modern-day Theodore Hall. I had to look up who he was. He was an American physicist who was a spy in the Manhattan Project for the Soviets. They may be taking that a step too far. But it is interesting to see the push and pull of competition on this. Michael, thank you very much. Oh, go ahead.
You got it, Becky. I was going to say, when Alex Karp 2 weeks ago complained about this, I'd love you to ask him again, well, what if the Chinese were hosting your models, right? How do you feel about that?
Yeah, it's a good point. All right, Michael, we'll talk to you soon.
See you. Thanks.
Thank you.
The Procter & Gamble reporting fourth quarter results just moments ago. Earnings of $1.43 topped analyst estimates by 2 cents. Revenue of $21.2 billion was just below expectations of $21.38 billion. For the full year, P&G sees earnings in the range of $6.89 to $7.11 a share. Estimates are $7.04, but I think prior there had been some guidance that might have been a little bit higher. I think the stock's off a little, and that is reflected. We talked about how the Dow suddenly was down more than it had been before. Maybe Procter & Gamble, obviously not maybe, but is adding some pressure to the Dow. Joining us now, Andre Schulten, P&G CFO. I didn't mention organic sales in the period. I know that I think that 1% to 3% was the guidance, and that continues to be the guidance. Andre, what were the numbers in the most recent quarter that just hit a couple minutes ago?
Yeah, good morning, Joe. Morning, Becky. Look, we just actually closed our fiscal year, so this was the last quarter of our fiscal year. So we just completed that guidance range. So let me come back to the forward-looking guidance in a second. But if you look at the fiscal year we just completed, Joe, I think two things to characterize the year. The first one, we continue to build momentum. We have now 7 out of 7 regions continuing to grow or hold organic sales. We have 9 out of 10 categories growing organic sales. Our share over the past 3 months, our value share at a global level, has stabilized with upward trajectory. So for example, we see share growth in China for the first time in a long time, and share growth in many other places accelerating. And we saw acceleration throughout the year. Half one was 1% sales growth, half two was 2% sales growth. To your guidance question on the year, we delivered every metric within the original guidance that we gave for the fiscal year, so 12 months ago. Many of the headwinds that we were actually facing were not known at the time, but still the team delivered organic sales growth and core EPS within guidance range. We returned $15 billion of cash to share owners, and we remained fully invested in the business to build momentum that we see now coming through. And we did a lot of that because the team delivered $2.8 billion of productivity, the highest productivity number this team has delivered in probably about a decade. So strong year. The quarter 4 results were a little bit below expectations on the top line. We beat on EPS, as you mentioned. The street was more optimistic on the top line for quarter 4, and rightfully so, because our consumption, so the actually sell out to the consumer, was much stronger, 2.5% in the quarter. The revenue we recognized in the quarter was only 0.5% for 2 effects. Number one, we had shipment acceleration in quarter 3. We talked about that in the Q3 call. And we had some trade spend recognition because of trade event timing that impacted the difference between sell out and sell in. But if you look at the year, half one, 1%, half two, 2%, so we're accelerating.
So if people were just watching the fourth quarter, what was the organic, did you say 0.5% was the organic sales growth in the fourth quarter?
That's right. That's right. And the street expectation was higher than that. It was 1.6. The actual sellout actually was 2.5. So the street was right to assume a higher number, which just didn't translate because of the shipment timing and because of the trade spend recognition. But structurally, if you look at the health of the business, 2.5% sellout is a fairly strong number, and again, growing or holding share in the majority of the business around the world.
There are some headwinds that you point out for the next year. You do report adjusted net normally, so I don't know whether that's responsible at all for the 3.5-4% pullback in the stock today, but has to do with foreign exchange, and it has to do with some input costs too, which is related to raw materials and inflation. Tariffs?
Yeah, absolutely. We just released guidance for the new fiscal year, which we just started, and we guided to 1-3% on organic sales and 0-3% on core EPS. And really, it's driven by two things. Number one, the strength of the consumer. The midpoint of the top line guidance assumes the consumer stays where they are at about 2% consumption growth. And the second component, which drives the range on the EPS side, is exactly what you say, Joe. It's the crisis in the Middle East, and therefore the impact on the petro complex from a cost perspective, the impact on supply chains, the impact on transportation. And we see in our base scenario, so the midpoint of the range on EPS assumes things pretty much stay as they are, about $90 a barrel oil, and the conflict continues, which means we continue to see transportation increases, we continue to see some supply chain constraints, and that gives us about $1 billion after-tax headwind for the year, so 6 to 8% headwind on earnings, which is embedded in the midpoint of the guidance range. If the conflict ends earlier, oil prices come down, I think we'll see a positive effect on the consumer, and we'll see a positive effect on costs, so that would move us to the upper range, probably on the top line and the bottom line. If it goes the other way, it goes the other way.
Margins have been an issue a little bit in the last couple of quarters, down 130 basis points, and that highlighting what you're talking about right now, I think.
It is the cost impact that is largely offset by productivity. As I said, the team has been able to deliver record productivity of more than 2.8 billion in the year. But it's also our desire to stay fully invested in the business, Joe. When we invest in the business, we focus on the consumer, we drive innovation, we provide superior value to the consumer at any given tier and price point, we see growth. And that's what we want to get back to. So the margin here is an outcome. We feel very confident that we have the right balance between investment in the top line, productivity, and then the outcome on EPS that we need to have.
John is retiring, I guess, as executive chairman. Mueller?
He is. The board just made the decision yesterday. We announced it to the team. So yes, John is retiring. After 38 years, he is sailing off in the sunset, but I'm sure he's going to do great things. So he's going to stay close.
The consumer in general, we think of a K-shaped economy, and you're a global company, obviously, but I think of it as more skewed to that lower part of the K-shaped economy. Are consumers, do you see any stress at all or trade down to different products at this point?
Well, if I want to start with the positives, consumers still like brands. So private label shares are down, even in Europe, where private label is most prevalent. Private label shares are down in the US. So brands are winning. Consumers still like innovation. When we innovate, for example, on Tide, we had the biggest formula boost in a long time in October of last year. Tide has been consistently growing and is now growing about 8%. It has been growing 12% in the last quarter. So consumers like brands, consumers like innovation. They are diligent in terms of value. And you see the K-shaped effect in the US. We have a number of consumers that are shopping in club, they shop online, they want the biggest pack size, cash doesn't matter to them, cash outlay is part of their value equation hunt. Then you have a number of consumers that truly are living paycheck to paycheck. They are more diligent. They need smaller pack sizes so they can manage the cash outlay. They look for value in promotions. But interestingly, Joe, even those consumers that are at the lower end of the income spectrum are choosing brands, and they're choosing our premium brands and solutions because they know they work. And they can't afford for their laundry not to come out clean and having to do it again. They want their product to work the first time it comes out. That's the beauty of our categories.
You're not seeing a trade down effect?
We're not really seeing trade down. And the most immediate trade down one would observe, Becky, is private label. Actually, we see when we innovate, we see consumers following and trading up. We just launched Tide Evo, completely new form in laundry detergent. And again, the market results are just in line with test market, nice incrementality, nice element of trade up. So when we provide the right value as product performance over price, consumers are willing to go with us.
So Andre, I guess, John, I used to talk about the Reds. I mean, you got any interest in baseball at all? They use their hands. You know what I mean? There's not a penalty for that. Or is it all soccer all the time? Did that guy who went back to Germany that missed that penalty kick, do you know, is he allowed to, could he go home? Do you remember that?
Yeah, I might develop an interest in baseball given where soccer is going.
After that.
Yeah, exactly. So first the Germans got kicked out, then the US got kicked out, so I gave up after that. So maybe it's the Reds. I hear they're building momentum, so that's great.
I think they're only 5 games below 500 now for, I checked, I think they lost yesterday. But anyway, you probably got some great seats. I know John did, and I'm available if I visit. Good to have you on today, Andre. Thank you.
Thanks for having me.
Okay.
When we come back, Senate Aging Committee Chairman Rick Scott and Ranking Member Kirsten Gillibrand ahead of today's hearing on combating AI fraud that targets the senior community. It's a growing problem. We'll talk about that when Squawk Box comes right back. The chip sector under pressure this week amid concerns about AI spending, taking it on the chin, not only just the semiconductor index, but also shares of SK Hynix, which really faced some severe pressure overnight in South Korea. Joining us right now to talk about what's happening in the industry is Chris Caso. He is Wolfe Research senior analyst. And Chris, I know that Wolfe Research has a banking relationship with SK Hynix, and you're restricted in terms of what you can say about SK Hynix. But what would you say based on this report that came out with their earnings and what we've seen happen not only to SK Hynix shares, but shares of the entire semiconductor industry?
Morning. In general, of course, the stocks doubled over the last 3 months or so. So I think a lot of what you're seeing here is, we've had a big run. The stocks has pulled back 25% from its high. It's a little bit of expectations after such a big run. What I could say for SK Hynix himself, and remember, Micron reported about a month earlier. That was probably the best report Micron's ever had, given the strength of memory and such. But remember, what's happened in memory is that the memory suppliers are severely supply constrained. They can't produce more, which is the very reason why we're bullish on memory, because there's these physical constraints. For SK Hynix himself, what I can say is, remember, they don't, unlike Micron, they don't provide formal forward guidance. So there tends to be a lot more volatility in where street numbers go. And so therefore, I consider this just a mismatch of expectations.
Chris, I think the biggest issue for the entire industry, though, is this question about whether this boom and bust cycle is going to remain a boom cycle and not hit the bust as we've seen happen in the past. And you're right, there's far more demand than can be met at the moment. The question is if that demand is still around by the time they're able to ramp up and try and meet it. What do you think?
Yeah, and that's the right question. And, at least what you could say right now is because of the physical constraints in the industry. I spoke about that with memory, but TSMC is facing the same thing right now. TSMC is completely sold out, and you just don't have the physical space to make the semiconductors right now. So it's really hard to see a situation right now where we're in oversupply. And typically, the overshoot that happens in semis is you build too much capacity, you now have the capacity to ship stuff and the demand isn't there. And because the current upcycle requires the building of brand new buildings that take a long time to build, even the potential of getting to that oversupply situation is really, 2028 at the very earliest. And as we speak to some of the equipment vendors, they even say, it could push farther than that.
Let's talk about NVIDIA. Let's talk about NVIDIA and what it's been doing to make sure that it is helping the AI cycle. Jensen Huang will tell you that he's looking out there, looking for the bottlenecks in growth for AI and trying to address all of those bottlenecks by using NVIDIA's considerable heft and balance sheet to make sure it props up some of those areas. That's why you've seen some of these financing deals that people have described as circular financing deals, because NVIDIA certainly benefits from the growth that it is helping maintain with some of these things. NVIDIA shares over 5 years up 905%, but they have struggled a little bit lately, even though they've had pretty incredible results and have been meeting demand and have an incredible balance sheet. And there are some thoughts that have been kind of put out there. Ben Emmons put out a note last night just talking about how the bond market is kind of coming calling at this point. Back in June, NVIDIA issued 7 tranches at a weighted average spread of treasuries of less than 0.5%. Again, because of NVIDIA's incredible performance and their incredible balance sheet. They use those proceeds to take equity stakes in a lot of the hyperscalers and the data center builders. And now we see credit default swaps rising on NVIDIA shares, which you would never anticipate from a company that's doing that well, but it's because they have used so much of their currency to help some of these companies like an SK Hynix or a Hut 8. And when their stocks have come under pressure, that reflects back on NVIDIA. Is that a fair reflection, and should we read anything into this? What do you think about NVIDIA itself?
Yeah, so a lot to unpack there, but generally speaking, I'm pretty comfortable with providing equity and such to shore up the supply chain, because again, the capital is required for your customers to go and and expand capacity. And, an equity investment, equity investments they made in OpenAI and such, there's lots of folks in the public market that would have made that. Where I'm a little less favorable is where some of the discussions about making backstopping some of the financing such that the customers are going to the public markets and looking for financing, and by getting a backstop, and Broadcom is doing the same with what they call an XPV for Anthropic and OpenAI, and that part of it is less good because there's some liability on there. And again, that liability is probably far in the future, but that part I'm less comfortable with.
Like the news about the $750 billion from backstopping for NVIDIA that went $500 billion to SK Hynix and $250 billion for OpenAI. That's the type of stuff that makes you a little nervous?
Yeah, and again, right now, the benefit NVIDIA has is they are generating just so much cash. They have such a strong balance sheet and probably the healthiest balance sheet in the industry. So, I think what Jensen's trying to do is figure that if financing becomes a bottleneck, that constrains his business. So let's try to remove that bottleneck. And again, Broadcom's doing the same. Ultimately, and listen, I think where the proof will be in the pudding, that OpenAI and Anthropic, they will go public in a fairly short order. They'll provide a lot more details around their business and prove to investors that, yes, there are returns here, there is a business model. And, one of the things we spoke about with these companies is once those two big folks go public, then they're going to be in much better position to go raise equity on their own. Certainly they will raise equity through those public offerings. And so we get the question a lot is what's going to calm people down? What is going to show that, perhaps what's going on right now is reminiscent of DeepSeek a year ago, which turned out to be a lot of nothing. I think the Anthropic and OpenAI IPOs will go a long way to that, because then we're going to get under the covers of the business model. We're going to see how they can finance, and you're going to see how the equity markets react to that.
Chris, thank you for joining us this morning.
Thank you for having me.
Coming up, Cheesecake Factory seeing more customer traffic. Apparently, the stock is on the move. Dom Chu is going to have a rundown of some of today's movers. That's next.
Time now for today's Aflac trivia question. What candy was originally called Mars Men before being rebranded in 1985 when it hit the U.S. market? The answer when Squawk Box returns. And now the answer to today's Aflac trivia question. What candy was originally called Mars Men before being rebranded in 1985 when it hit the U.S. market? The answer? Sour Patch Kids.
One of my favorite candies, by the way. All right, welcome back to Squawk Box. I'm Dominic Chu with your morning mover. Shares of Gucci parent company Kering are popping roughly 14% in European trading. The company did post higher revenues in the quarter from a year ago. The Gucci brand itself saw a 2% decline in sales, which was better than expectations, and a significant improvement from the previous quarter's 8% decline. Those results do indicate that the company's turnaround plan is perhaps solidifying under its new CEO. Meanwhile, you got Avis Budget shares, which are going the opposite direction, sinking by about 11-12% right now. Revenue and earnings both came in below estimates. The company blames shifting booking trends and weaker demand in its largest market, which is the Americas. Shares hit a record high back in April due to a short squeeze, but have since declined to kind of pre-rally levels. So you can kind of see that big move here, and then we're down 11% right now, so keep an eye on Avis Budget. Cheesecake Factory shares are right now gaining just about 3.5% as increased customer traffic from menu innovations, rewards programs, and marketing drove stronger revenue growth. The company also opened 4 new restaurants during the period and plans to open 26 new locations in this fiscal year. That stock, by the way, has surged roughly 45% over the last 1 year period, so keep an eye on that. And then Caterpillar shares are right now down just about 3.5% after analysts at Baird downgraded that stock to a neutral rating and removed its bullish Fresh Pick label. They say that the New York's new moratorium on data center construction is a sign of increasing data center regulations, which could mean newer hurdles and slower investments for 2027 and beyond. Now, for more on those and other top analyst calls of the day, just head over to cnbc.com/pro, where subscribers get all the context and detail, Joe, around the analyst upgrades and downgrades each morning. I'll send things back over to you. I'll be thinking about Sour Patch Kids for the rest of my day.
Well, the worst candy is great, and the worst cheesecake is great, for that matter.
They're also just massively portion sizes. Awesome.
You can get a half slice, apparently. You can get a deal on one. What is there any candy that you'd say no, that you won't even eat?
That I
tried
will
to think
not
of
eat.
something.
I have never really been a Twizzlers fan. I like Red Vines, red licorice, but I don't really eat
Twizzlers
Twizzlers.
are really good.
I know.
If you bite off
The
of it,
pull and
wife
peel.
loves it.
just suck up the soda.
Yeah, the pull and peel ones are good.
Right.
I'm trying to think. What did you say, Contina? Which one do you know?
Red Vines.
What are Mary Jane? Oh, we gotta go. He gives me Mary Jane's, and then he says we
Oh, those
gotta
are
go.
kind of sticky. They stick. I think that I remember that.
I mean, some people don't like
Peanut-
coconut.
That peanutty.
Yeah.
Happy
Some
Meal.
people don't like Mounds. I like
I
Mounds.
like all of it.
I like Mallow. I like
Sometimes you feel like a nut, Joe. Sometimes you don't.
Butterfinger, Zagnut.
What's a Zag?
Peanut chews. Go date yourself now. Go back to peanut chews.
Mary Jane's. Looks like that.
Okay. Coming up, lawmakers taking on AI fraud targeting the nation's senior community. Senators Rick Scott and Kirsten Gillibrand will join us when Squawk Box comes right back. The Aging Committee holding a hearing today to examine how AI is impacting the senior community, and there's a 2024 report from the committee which revealed fraud and scams cost seniors more than $4.8 billion. A 2025 report said those instances have increased now at an alarming rate due to AI. Joining us now, Senate Aging Committee Chairman Rick Scott and Ranking Member Kirsten Gillibrand. It's great to have you both on this morning, and this, you know, hold the presses. It shouldn't surprise anyone, I guess, Mr. Chairman, that seniors are probably more vulnerable to scams involved, and AI just makes it easier.
Well, I mean, they're you know, pulling our heartstrings. They're trying to get our money by having some fake photograph or some voice impacts. Talk about our kids and our grandkids. They're just stealing money. I think in 2025, people over 60 lost almost $8 billion, and it's growing every day. I mean, every day my wife gets phone calls offering to lend us money, and it's all just AI trying to steal our money.
Yeah, and you hear from a lot of constituents, Senator Gillibrand, I guess the same thing. How long has this been on your radar?
For at least a decade. It's been an exponential growth in the number of seniors that are being targeted by different AI scams. Sometimes these AI scams are the ones they used 5 years ago, but they're just more effective. So they're able to now clone the voice of a grandchild, clone the voice of a daughter. They're able to use social media or different types of visual content that looks very real. And so for our seniors, they're often targeted because they have a great deal of money in savings. And on average, seniors are losing tens of thousands of dollars every year.
What is the answer to this, in your view, Senator Scott?
Well, first off, we're going to have a hearing today, and we're going to have some ideas. We're going to talk about the problem with some ideas, but you know, our federal government's got to be part of this. We can't just rely on our state and local government, and they've got to be targeting. We also have a bill called StopScams.gov, which would put all these scams in one place where federal agencies can look at that to see and target the right groups. A lot of it is coming out of Southeast Asia. A lot of it's run by criminal organizations out of China. So we've got to crack down on it.
Senator Gillibrand, is it worse in your state? I don't know. I think of more scammers in New York. Is it everywhere across?
It's everywhere. It's everywhere because these are international criminal networks that are targeting our seniors because they are vulnerable to being misled or to not understanding what's happening. They also tend to use techniques to make seniors nervous. They will try to rush them so that they don't check in with a loved one first. They try to keep them on the phone for hours so that they can't get off the phone and call a loved one to make sure that this is real. They try to embarrass them. I had a family member who was told that she didn't pay her taxes and that the FBI was about to come to her door, and if she didn't pay the $5,000, they would arrest her in front of her children and grandchildren. And that made her so nervous and anxious that she just sent the money. So a lot of the legislation that Senator Scott and I are working on would provide more tools to our seniors, would allow the FBI to coordinate with local law enforcement to make sure our seniors are aware of what the latest scam is. We work with stakeholders like AARP to make sure they have all the data and information about the latest scams, which they then post to their members. It's all about awareness and making seniors understand they need not feel badly that they're being targeted and not feel like it's their fault. These are sophisticated international criminal networks. And so if they ever feel rushed, if they ever feel like someone is lying to them, they should get off the phone immediately, not click on the link, not engage, and call someone they trust to help them navigate whatever problem is being presented to them.
I know you want to, Senator Scott, talk a little bit about the Clear Labels Act, which is it's not the same thing, but it certainly is protection for, once again, for seniors.
Well, first off, you know where your clothes are made. If you go to the grocery store, you know where your produce comes from. You should know what drugs you're putting in your body. Over 80% of the drugs you're putting in your body are generic out of India and China, with almost all the ingredients out of China. We know they're not safe. There's studies to say that is not safe. We don't have inspections done well over there by the FDA. So we got to let people know. So when we get this bill passed and went through committee 21 to 1, we're going to get this done. It's a bipartisan bill. It's going to say when you see your pill bottle, it's going to tell you where the ingredients come from. It's going to tell you where it's produced, so you can make an informed decision.
Senator Gillibrand?
This legislation will be groundbreaking because there's so little information to the average U.S. consumer to know where their medicine's coming from and that it's safe. And we believe that this labeling will be the first step in allowing more reshoring, allowing more information, and allowing more opportunity for domestic producers.
I know you two need to run. I'm trying to run out the clock, Senator Gillibrand, because I don't even want to ask you about the DSA or the big tent or any of the things I asked Senator Fetterman about yesterday. He went off, and I made the point to him that I can't get any normal Democrats just to say this is outrageous. The kind of stuff that's being proposed, closing down prisons, getting rid of the Senate, all these things. You see firsthand what's going on in New York City. Can I get you to weigh in on anything that you're seeing in your party that you might think, wow, I don't agree with that?
Well, the positions you just mentioned, I don't agree with, and I'm in charge of flipping the U.S. Senate, so we have really talented candidates running all across the country, many of whom want to bring people together and who are running on common sense, often bipartisan ideas, as ways to serve the public and to make a difference.
Senator, I mean, you want to win so badly that you were riding a guy up in Maine that was clearly beyond normal in terms of candidates, and the urge to try to regain power in the Senate was so great that Democrats were willing to look aside at some of the most heinous things that we've seen in a candidate.
We're confident that we can win Maine, and we have a strong nominee, and while I work well with Senator Collins, her numbers have never been lower than they are today. See, this is what I mean. I can't get anywhere on this, Senator Scott. Maybe I can get you to talk about that. Do you think some of this is crazy? Closing down prison?
Yeah, I mean, look, government-run grocery stores, closing down prison, being against law enforcement. I mean, unfortunately, you have some crazy people on the left side that I think are hurting not just the Democrat Party, but the whole country.
You can say something about the right side if you want, Senator Gillibrand. This is an equal opportunity show that we do. You got plenty of ammo too, I'm sure.
Yeah. Well, I would just suggest that this country and my constituents expect me to work hard on their behalf, to find common sense bipartisan ideas like the ones that Senator Scott and I have talked about today, to make a difference in their lives. So we are trying to make safer medicines available for our seniors. We're trying to make sure that our seniors are not targeted by scammers and criminal networks that are operating worldwide to take their hard-earned money away. And the story that you should be reporting on is how much good work is being done on a bipartisan basis in the Senate every single day to help people. And that is why we are serving, and that's what we do on the Senate Aging Committee.
Okay. You going to ask any questions from Fauci today, Senator Scott?
Well, we're just going to try to get facts. I mean, we're going to get facts. Why did he make some of the decisions? You look at the diary, and what he was saying, putting in his diary was not consistent with what he was saying publicly and how he led his life. So I think we just got to get some answers.
Okay. All right. We'll keep it short. Keep it there. I know you had to go. Senator Scott, thanks. Senator Gillibrand, thanks. Appreciate it. All right, coming up, the Clarity Act is stalled on Capitol Hill. Rob Nichols, President and CEO of the American Bankers Association, is going to tell us what the financial industry wants to see in the bill designed to regulate digital assets. He joins us next as we head to break. Check out some of the cryptocurrencies. This morning, Squawk Box returns in just a moment.
check out shares of Dow component Visa. It's off by about 1.4% right now. That comes after the credit card giant beat on both the top and the bottom lines. Payments volumes were up by 10% to top $4 trillion for the first time in Visa's history, but fiscal 2026 guidance underwhelmed the street. Visa is planning to cut 7% of its workforce as its CEO looks to use AI to streamline company workflows. When we come back, inside the Kendra Scott jewelry empire, a company that started in a spare bedroom and with just $500 is now a billion-dollar business with dozens of stores across the nation. We'll talk to the chain's CEO about growth and the state of the consumer next. Welcome back, everybody. Our next guest will give us his insights into the retail landscape and the state of the consumer right now. I want to bring in Chris Blakesley, who is the CEO of Kendra Scott. The jewelry company is valued at over $1 billion. That's based on the last investment round from back in 2024. But obviously, many people know this brand. And Chris, thank you for coming in.
My pleasure. Thank you for having me.
I have been a fan of the jewelry for a very long time. I know that there have been some changes that went through. The last CEO, Nolan, left back in 2025, and Kendra Scott herself came back in to run things until you came in January.
That's right.
You've got a very interesting background yourself, coming from Alo Yoga and from Athleta before this. What are you doing differently at Kendra Scott? Where do you see things headed right now?
Yeah, well, I met Kendra for the first time in the fall of 2025, and I could immediately clearly understand her vision for the company. We're going to be 25 years old next year, and her vision was to create this accessible, attainable luxury brand that's, sort of spans all consumer demographics, but could be a globalized brand and has so much opportunity to expand in product categories as well. And what I found is that, particularly in my experience at Aloe, there's just an evolution that has to happen when brands get to a certain size to get prepared for that next phase of growth. And I'm finding that journey now 6 months in to be a very similar journey. But we are focused on building the house of Kendra Scott, a design house, as I said, an attainable luxury design house. We have a relatively new brand, 3-year-old brand named Yellow Rose by Kendra Scott, which is a multi-category brand, Western-inspired fashion. It's taking us into boots, into hats, into apparel, into leather goods, accessories. In fact, in that brand, less than half of our revenue is jewelry. So it's showing us that our consumer is willing to go on the ride. We have incredible domestic growth potential, but we have incredible international growth potential as well.
Given your background, should we anticipate paid athleisure wear as part of this, or are you kind of staying away from that?
I don't think so. I think Yellow Rose will move very much into apparel. It's already in that category. We have a really clear vision on that brand. Actually was born out of the Yellow Rose Ranch, Kendra's actual ranch in Texas. And it was sort of this intersection of life on the ranch, professional life, all those elements of fashion. So we're building the brand in that direction. Athleisure doesn't quite fit there, but many other categories of products do.
It is interesting for people who don't know the story. As you mentioned, I think it was 2002 when she first started this in a spare bedroom in her house.
That's right.
$500. She looked
$500.
around and thought, it's not a great place for jewelry. She didn't like how everything was behind counters and locked up behind glass.
Yes.
So she came out with something different and wanted people to try it on in the store.
She did. And here we are, almost 25 years later. We're one of the largest jewelry brands in the United States. But from the beginning, also very purpose-driven. We've given almost $100 million to causes through the Kendra Scott Foundation. Any given month, we're active in over 40 children's hospitals around the country. We take our mobile color bar experience into those environments and give kids an opportunity, kids who are dealing with very tough circumstances, to create a piece of jewelry for themselves, for their family members. And it really just totally changes their demeanor and their experience. Purpose has been at the center of the brand for so long, and I think that's part of why we've had such consumer loyalty over the years, because we think of our stores as an extension of the consumer community.
What are you seeing in terms of the health of the consumer at this point? Because we talk an awful lot about the K-shaped economy. Kendra Scott is, I guess you guys like to call it attainable luxury, but most of the jewelry pieces are below $200. And I think of it as being as part of the consumer where some of them may be struggling at this point. What are you seeing?
We're seeing surprising stability across the consumer spectrum. As you said, we do a lot of our business under a $200 price point, but we have items up to $10,000 as well. And if you go into a Kendra Scott store, every store has something we call it the Kendra Scott Color Bar, where you can custom make a piece of jewelry. And we have groups of people every day doing this, whether they're marking a milestone, celebrating an anniversary, maybe it's a reunion, maybe it's a birthday. And it's a very experiential aspect of the retail experience. So we know that consumers are spending more of their discretionary income on experiences. We give them the opportunity to do that at the same time they're getting an amazing product. At the same time, our high jewelry, our fine jewelry, is the fastest growing part of our business, which is showing us there's incredible strength in that upper income consumer. And I think with the increase in precious metal prices over the last couple of years, the value of gemstones, those consumers are thinking jewelry is an investment as much as it is an item of adornment or an item that marks a milestone in their life.
How many stores do you all have right now?
170 between the two brands, 165 Kendra Scott and 5 Yellow Rose.
And what's the plan for expansion among those stores?
So we have an incredible path to expansion, even domestically. Our data would suggest that we can get to about 300 just Kendra Scott stores in the United States. Yellow Rose is still to be determined, but I think Yellow Rose is easily a 100-store business in the United States over time. And as I mentioned earlier, we're still completely, for the most part, a domestic business. And so international expansion into Latin America, into Canada, and into Western Europe are all things that we're starting to put in view to our long-range plan.
Chris, what things do you find that concern you the most, if anything? Obviously, you've got a lot of things going on, but where do you spend your most time at this point plotting and planning?
Well, I think it's what you touched on. I mean, we are watching the consumer very closely. We know there's a lot of pressure there. And so as inflation continues to be a factor, we want to make sure that we're creating an amazing experience for that consumer. But at the same time, we want to make sure that the consumer's really emotionally connected to our products as well, and that we maintain that. So as we navigate things like AI and the utilization of new technologies in the business, for us, particularly with our culture pillars of family, fashion, philanthropy, maintaining that emotional connection to the consumer is the most important thing.
Chris, thank you for joining us today.
My pleasure. Thank you.
All right, folks, it is 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan, and among our top stories this morning, U.S. Central Command says that Iran launched ballistic missiles at American forces, but all of those missiles were intercepted. In the meantime, the United States and Saudi Arabia carried out new strikes on Iranian-backed groups in Iraq. The Senate has confirmed Jay Clayton as Director of National Intelligence in a 51-47 party line vote. The former SEC chair succeeds Tulsi Gabbard. And stocks in South Korea sinking for a second straight day after an earnings miss from SK Hynix. SK shares in South Korea down nearly 47% just over the course of the last month.
The futures have been all over the place this morning. Down about 230 points. I think P&G's part of that, and some other Dow components, obviously.
Yeah, oil prices have picked up a little bit, too.
Well, maybe we'll take a look.
Yeah.
And it's Fed day, and here's a look at Treasuries. 460, 462. Let's get to Dom Chu with a look at this morning's pre-market movers. Hey, Dom.
All right, so Joe, Becky, we're going to start with shares of data storage company Seagate, which are higher right now, but you can see here by just about 5 to 6% after a top and bottom line beat for its most recent quarter and better than expected Q1 guidance. The data center revenue side of things also blew past estimates. That stock has seen huge gains over the past year, up over 400%, now despite a more than 15% drop in July just alone. Those stronger results are lifting memory stock peers higher in the pre-market trade as well, so keep an eye on not just them, but SanDisk, Western Digital, Micron, everybody else out there. Meanwhile, Joe alluded to Procter & Gamble out with its results this morning, more mixed. An earnings beat, but a revenue miss. The company's organic revenue growth was unchanged for the quarter due to flat volumes across P&G's portfolio. It saw an organic sales increase of only one of its 5 product categories. That's the beauty segment. Those shares are right now down about 2 3/4% and down about 7.5% over the past 12 months. And then Humana is sliding right now, just down about 6% after an earnings and revenue beat. The insurer cut, though, its full-year GAAP earnings target, but left the adjusted earnings outlook unchanged. It also kept the same Medicare Advantage growth rate guidance, and its benefit ratio, which is the percent of premium revenue that goes towards paying medical costs, came in roughly in line with expectations as well. So Humana shares on balance, though, down 6%, but it's been a nice move, as you can see, over the course of the last few months. Joe, I'll send things back over to you.
Okay, Dom, thanks. Before we go to break, check out oil prices, which up $3 now. They're below 80, now back at 82 and change. We'll read the charts on the markets, including price levels of Bitcoin. Squawk Box returns in just a moment. to join us now to talk market technicals and, well, different markets. Maybe we'll get to, who knows? We'll see how we're feeling about things. Maybe Bitcoin, maybe oil. Katie Stockton, founder and managing partner at Fairlead Strategies, as well as a CNBC contributor. I keep having to sort of rouse myself to pay attention to the S&P. So it crossed 7,500 in May. We're at 7,500, and I think it's almost August.
It has been a really persistent trading range or consolidation phase, and it got pretty coiled up, which means that it was like a converging consolidation phase. Now it's broken down from that.
We're below the 50-day moving average, but it's been out of sheer boredom that it's finally doing that, right? There's nothing happening. Does that make it less consequential, or
it's been really like sticky right there, right?
Yeah.
But no, so now what's happened with that breach of the 50-day moving average, in addition to some other short-term support, there are new downturns in the weekly indicators, and that means that it's probably more of an intermediate term issue versus just a short-term issue. We have a weekly MACD sell signal for one. Those usually are intact for several weeks, so that's our timing for, I think, more corrective price action based on what we're seeing.
Is it a duck where it's like putting me to sleep, but its feet are going furiously? Because the NASDAQ 100 is sending a different signal, isn't it?
Well, now they've lined up, right?
Yeah, but
they have.
Is the 100 is close to a correction?
Well, we have a downdraft already of more than about 10%.
More
right?
than 10%.
So we're at that point where it's in correction territory in our work. We'd already seen the same loss of momentum that the S&P is now suffering. So it doesn't really bode well, of course. Maybe it doesn't need to be as dramatic for the S&P 500. We've had those mega caps step in initially, and then there was enough rotation to keep a bid to it in general, and earnings have been somewhat mixed, I guess. So I think there's still risk to the downside for the NASDAQ 100, and that it's a bit too early to get excited about the downdraft as a buying opportunity in the AI trade.
It used to be, software, but chips are okay. Now it's, what's okay now in that AI trade?
No, well, now in the AI trade, I'd say not much is okay right now.
Even Caterpillar shares have gotten knocked.
Yeah, but give it a few weeks, right? I think that will be the upside leadership coming out of the corrective phase.
Is it time we need to watch for, or you think there are additional drops that need to show up?
I think additional drops for the most part because of these relatively new signals. For the NASDAQ 100, the next support is between about 5 and 6% below. That's been a level
off, what, about 10%?
That's right. So it's really, it could be still downside follow through, but maybe not as dramatic as what we have seen. I think that initial sort of sentiment shift has already been absorbed to some degree from the AI trade. So still has downside based on our indicators. But what we look for are intermediate term oversold conditions and then a little stabilization, so short term momentum improving. And we don't have that yet.
How did Bitcoin do in terms of improving sentiment? Because it was 58,000 or so, got back to 65, and it's been 63 to 65. It seemed like sentiment got really negative at 58 or 59. That's where everybody was interested in selling, even though they wanted to buy it at 100,000. They won't buy it at 59,000.
And there is market psychology for you.
Is it out of the woods at this point, or?
I think there are some real signs of downside exhaustion for Bitcoin from a long-term perspective, and the lack of correlation to the NASDAQ 100 I see as a positive as well.
That's starting to happen because it used to be higher.
Oh, it's come way off.
It has.
Way off. And I think it comes in part from the fact that the NASDAQ had such a strong up move and Bitcoin had such a strong down move. So now Bitcoin is stabilizing and perhaps has reached a level at which it makes sense for it to base. That's in that kind of 50,000 or 58,000 area as initial support. And we are seeing improvement in our short to intermediate term gauges. So we're more constructive Bitcoin, short to intermediate term, more neutral still long term until we see more evidence that that's a long term turnaround.
You're not just feeling better about it because you have this new product, are you?
No.
What is this
The
thing?
product is really kind of trend
The
agnostic.
Fairlead product?
It is. It's called the Amplify Fairlead Tactical Bitcoin ETF.
Oh my God.
BNAV, BNAV, brand new today.
And tell me how it works. You're advertising it as maybe less volatile than owning just a bit?
I think more importantly, it's about finding the momentum when Bitcoin's exhibiting it and leveraging up in that kind of environment.
Less leveraged if it's in a downtrend. And
that's right. Or a range, right? So when the indicators aren't lining up across time horizons, we will be underexposed to Bitcoin, but always with a base level of exposure of about 70%. And when the momentum gauges and our trend following tools line up across timeframes yet again, then we will use leverage.
Well, you could do that just with the spot. I used to have a friend who had a company, and their investment motto is we like to be more heavily invested in rising markets and less invested in falling markets.
Don't we all, right?
That's like the dumbest thing I've ever heard anyone in terms of that. That's why I made fun of it so much. It's like no kidding, Sherlock.
So it's a model-driven
So you get more exposed in a
More
rising.
exposed.
But you look at actual indicators that give you some confidence that you're in a rising.
And you know our methodology, all technical analysis driven. So we are very closely watching these trend following
And then
prices.
you'll go to 70% leverage.
It will toggle up when the market warrants it. And this is something that's new to an ETF wrapper. So there's a lot of ETP, so exchange traded products, but this is an actual ETF under the 40 Act. So it's under those regulations. And of course, it's easy for folks to access it, just like it trades
came
like a
up.
stock.
It came
there
up.
There you go.
And you
As
can
of
buy, I
today.
could call somebody, Schwab, we like Rick.
Yeah.
Let's say him. So you could,
Rick Worcester.
yeah. So you call Schwab, buy me some Amplify Fairly Tactical Bitcoin ETF.
We'll call it BNAV, yes.
BNAV.
BNAV. We're staying with that whole navigational theme that we have with our first ETF, which is the ticker TAC, T-A-C-K.
Yeah. Why is oil have such a hard time going to 150?
You know, the why question isn't for me, but what's going on with crude oil, you know, it's pulled back sharply from some short-term resistance around 90. I think it's going to make a higher low above support around 67. And that's because we have very significant improvement, if you want to call it that, in our long-term indicators. So that monthly MACD, for one, has shifted to suggest that this is a different environment for crude oil.
Isn't it MACD?
The MACD, so that's moving average convergence divergence.
The hip-hop guy?
No.
Okay, we gotta go. Sounds like it, huh?
Mac Daddy.
Mac Daddy.
Mac
All
Daddy.
right. So you can't tell me about, you know, that they're attacking our troops in Jordan. That's not something you're.
That I cannot predict, but what I will say is the chart does look higher, and the resistance above 90 goes right up to 110.
I asked
under
someone,
API.
could the technicals really work in like a period of war with the strait being? I mean, does it? It still works?
It still works, but sometimes you have to be somewhat reactive as opposed to
You
trying to
would think.
anticipate the next move.
Yeah. Okay. Thank you.
Of course.
When we come back, searching for more clarity on the Clarity Act, American Bankers Association CEO Rob Nichols on the concerns banks have about the bill and the potential impact on the industry. And later, it is Fed Decision Day. We're going to be speaking to Goldman Sachs Vice Chair and former Dallas Fed President Robert Kaplan about interest rates and what he expects today. Squawk Box will be right back. finance, fintech, crypto, big banks, all waiting for the Senate to move forward on the Clarity Act, which would put some new rules around crypto and stablecoin industries. Joining us right now to talk about it is Rob Nichols. He is the president and CEO of the American Bankers Association. And Rob, I can't think of anything that has gotten bankers more riled up than the Clarity Act recently. Maybe we can point back to the huge kind of back and forth fights between Jamie Dimon and Brian Armstrong from Coinbase about what's going on here. You obviously represent bankers. Why don't you tell me your side of things, what you find wrong with the Clarity Act?
Sure. Well, there's a lot of good in the Clarity Act, too. We do think that we should have a supervisory framework over digital assets. We think that's important. And innovation in the United States is important as well, so we support that. But we want to make sure we do it in a way that doesn't impact economic activity and local lending. So the new draft, Becky, that just came out, it's 600 pages, and the intent of the senators is to ensure that, just like in the Genius Act, issuers of payment stablecoin are not able to offer yield, interest, or reward for fear that deposits would flee banks and credit unions, and that would impact a lot of economic activity all across the United States, New Jersey, and everywhere else. So we're working with the senators just to make sure that the language that they intend can also extend to affiliates and to exchanges, and so there isn't a massive dampening of economic activity. So the Congress intent here is simply what we're helping them do. The bill, Becky's about 600 pages, and there's only 2 paragraphs that we're suggesting tiny surgical edits. So the bill will do exactly what the senators want it to do. I will say this too, and you mentioned the dialogue between Mr. Armstrong and Jamie Dimon. I do think that the crypto and the banking sectors can coexist. I think we can be the crypto capital of the world, and I think we can be the banking capital of the world. But there is a reason that they call it payment stablecoin and not deposit stablecoin. Congress views this as a very important payment innovation. I share that view, but they don't view it as a deposit substitute. And the two things are different.
But Brian Armstrong says that what he's been pushing for with this and what the legislation says at this point is actually in favor of consumer interest. Why do you disagree with that?
Well, these are different products. So if you put money in a bank, you have FDIC insurance, you have consumer protections, and then the banks lend those dollars out into the community, in home loans, small business loans, ag and farm loans, all of that. That doesn't happen on the other side. That doesn't mean that payment stable is super important innovation and that the United States should lead. We should, and I think we can lead in both industrial sectors, but they are fundamentally different products, and it's kind of apples to oranges.
Jamie Dimon's point has been that you shouldn't be allowed to offer bank-like interest on stablecoins without matching all of the regulatory oversight that comes with that too. Things like anti-money laundering and other controls that should be part of that too. Is this just an issue of fairness between competitors?
Well, no, I wouldn't view it that way. I will say there are other issues that are being debated in the Clarity Act right now. The AML-BSA reforms and provisions are a key part of that as well. So there are other issues apart from this debate over yield, interest, and rewards that are being discussed in Washington right now. So listen, I think, Becky, we can have both. I think we can have a thriving banking sector and a thriving digital asset sector, but we shouldn't do so. We shouldn't create a new supervisory architecture that would take money out of local lending and local communities and local economies. That would be a concern, and Congress noted that, and that's why a year ago in the Genius Act, they made clear their intent that that shouldn't happen. At the same time, we want to promote a vibrant digital asset economy and industry here in the United States.
It does make sense to me, and your organization has pointed out that any of these new assets wouldn't be insured the same way that money in a bank or a credit union is through the FDIC. That makes sense as a consumer protection on this. You said of the 600 and some pages, there's only 2 paragraphs that you all would like slight changes. What exactly are those paragraphs, and what are the changes?
Yeah, they're in a section that was formerly called 404, and they just changed the number in the new draft. But for example, when they're talking about the prohibitions, there's a phrase that says they should be functionally equivalent. We want to change that to substantially similar. I mean, these are tiny surgical changes just to achieve clarity in the Clarity Act so we don't have a repeat of the loophole of language that was a little vague a year ago in the Genius Act.
Okay, tell me this again. Substantially similar versus what? What was the phrase that said it right now?
Functionally equivalent is a term in there now, and we just want to propose changing it to substantially similar.
Which would do what?
Which is language, this is around the prohibition for offering yield, interest, and rewards, around balances and that sort of thing. So these are very tiny surgical and technical changes in about 2 or 3 paragraphs of a 600-page bill. By the way, Becky,
what would Coinbase and others say about that change? Functionally equivalent, changing it to substantially
I don't know
similar.
what they would say.
It's just such legalese. What does the difference mean?
Why? I'll tell you what the difference will do.
Yeah.
It will strengthen the bill's prospects and what it
But
offers.
tell me why you want to change to that. I think I'm pretty empathetic to your cause on all of this, but explain to me.
Consistently within the entire, so the language is consistent within the entire bill, and that there's certainty, more durability, and enforceability as the rules get promulgated through the regulatory agencies. So this is just to create clarity within clarity.
But is this to say?
I can't speak for Coinbase, and I won't speak for Mr. Armstrong, but this will create, Becky, clarity within the bill so we don't have a repeat of what we had in the Genius Act.
But the difference between functionally equivalent and substantially similar is referring to what? The assets that they're offering?
Comparing them to how they're comparing yield, interest, and rewards to bank-like deposits.
Okay. And you think that would help police the situation down the road?
These are tiny surgical changes that we fundamentally believe would strengthen the bill's prospects. And I'll tell you why, Becky, because there are a number of U.S. senators. I've been spending a ton of time in the Senate for the last 2 or 3 weeks, meeting with senators who are concerned about the impact on local lending and economic growth. They are concerned. They have raised their voices around these concerns. So these are the sort of very surgical and tiny changes that, if made, will increase the likelihood of the bill's prospects.
So you don't think they have enough votes for cloture right now, those 60 votes, but you think if they made some of these changes that you've described, they would be able to get those votes?
I think that it would strengthen the bill's prospects for sure, as we've discussed with a number of senators, both Republicans and Democrats alike, Becky, on and off committee, who are concerned about the potential impact on local lending, economic activity, and have expressed those concerns to the Senate leadership. So I do believe fundamentally that these tiny surgical changes would improve the bill's prospects. Absolutely.
Okay. Rob Nichols, thank you for joining us, Rob.
Thanks, Becky.
All right, still to come, new comments from President Trump moving markets. Details next. And then later, Goldman Sachs Vice Chair and former Dallas Fed President Rob Kaplan will join us and talk about today's interest rate decision. Squawk Box. We'll be right back.
right, check out crude oil prices this morning. They are now up by more than $5 to $84.32. We had been looking at elevated levels. WTI closed below $80 a barrel yesterday. But then overnight, we saw this surprise attack that was launched on American troops in Jordan. Those troops were protected. All of the missiles that were launched were taken down. But this morning, we are now getting reaction from the president about all of this. President Trump telling a Fox News reporter that the United States will be hitting Iran soon and very hard, in much more colorful language. He said this is response to the attacks on those U.S. targets in Jordan overnight. And you can now see a gain of 6.5%. Those gains in oil prices have pressured equity prices this morning. You'll see that the futures contracts right now are down across the board. The Dow is now off by 378 points. S&P futures down by 21. The NASDAQ indicated off by about 150 points. Still to come this morning, why some are making the case for a rate hike today. Steve Leisman will join us with the details on that. And we'll be hearing from Goldman Sachs Vice Chair and former Dallas Fed President Robert Kaplan. Squawk Box will be back in just a moment.
But officials
I believe he showed Dr. Anthony Fauci just beginning a hearing on Capitol Hill. He's there. It's Rand Paul is beginning the hearing. But Fauci is going to testify before the Senate Homeland Security and Government Affairs Committee about the origin of COVID, the government's response to the pandemic. Committee Chair Rand Paul subpoenaed Fauci to testify and has accused him of lying about the origins of COVID. Fauci has denied that. About destruction of emails. There's a lot that's going to come out of this, and he's got a blanket pardon from Joe Biden, whether it's the auto pen or Biden himself, but he's got a blanket pardon. But any perjury from here on out would not be covered satisfy that pardon. So we'll see exactly what happens. It's Fed decision day as well. And for the first time in a long time, that decision is at least somewhat in doubt. Senior economics reporter Steve Leisman joins us with the case that some are making for a rate hike today. Hey, Steve.
Good morning, Joe. Yeah, markets go into the Fed meeting with an unusual level of uncertainty about what the Fed's going to do. It seems more or less the way Fed Chairman Kevin Warsh wants it to be. While most see the Fed on hold, some are making the case the Fed could and should hike today. Take a look at the probabilities. 33, 34%, actually it might be 36% now for a hike, with 67% for a hold. Days before a meeting, markets usually have a 95% probability on whatever the outcome is going to be, and they're right about it. In Warsh's new regime, markets have to hedge against uncertainty and unclear outcomes fostered by his refusal to tip his hand, and some actually think the Fed could and should hike. So there's a belief and there's a hedge. Among the reasons, Warsh has insisted inflation is the Fed's responsibility and will deliver price stability. He's looking for market signals, and those signals are pointing towards higher rates ahead. Plus, there could be benefits of a surprise here, proving the Fed's independence and proving that there's a new regime or a new sheriff in town. Citadel writing, to maximize the probability of changing the inflation process, the central bank must first deliver decisive policy action to jolt economic agents into internalizing a new reaction function. New sheriff in town, in other words. A second exhibit for the hiking camp is the 2-year note. It's remained elevated, even while oil prices have declined and then can come back up. It now stands 64 basis points or so above the Fed funds rate. That would seem to be an important piece of information for a Fed chairman who said he's listening closely to market signals. To be sure, a hold is what's priced into futures markets. It was the overwhelming sentiment in our CNBC Fed survey. It's the house view of Goldman, JP Morgan, and Citi, among others. Citi saying it would be hard to explain declining to hike in June, but then hiking in July after both inflation and jobs data were softer. So a hold with perhaps some hawkish dissents and or a hawkish bias in the statement, that's the odds-on bet. But many on Wall Street have found it prudent to place at least a few bucks, Joe, on the long shot coming in.
Yeah. I don't know what to ask you, Steve. If you knew what was going to happen, then we could all place our bets right now. But you don't.
I don't know what's going to happen. I'm pretty I thought you might ask me, Joe. I could have put this in I could have sent you an email, but is this a better way to run a railroad? And I'm not really sure. I don't know. I don't know that this creates better monetary policy outcomes to have this bit of doubt going in. You know, some people I talked to, I just talked to John Canavan from Oxford, and he says that he doesn't expect much of a very volatile unwind. There is some stuff that needs to unwind. These bets, if they're wrong, have to unwind. Of course, if it's on the other side and the Fed does hike today, it's going to be much more volatile unwind. And we'll see where those bets are by the end of the day. They're probably in the futures market, in the overnight swaps rate. Could be a bit in the 2-year as well. That may have to unwind. And we'll see how much of that bet is in equities. In other words, if some of the equity, if some people in equities were hedging an outcome today, and you get that hold, you could have a nice pop in stocks as a result. So we'll see how much was where.
Did you mean we'll see at the end of the day, or did you mean we'll see at the end of the day? I think you meant at the end of the day today. We will. You didn't mean at the end. Anyway, these are semantic. Rob Kaplan's here. He knows.
He knows.
He told me off camera. He knows what the. No, he didn't.
I did not.
He did not say that. Goldman Sachs Vice Chairman Rob Kaplan is here. He is a former Dallas Fed president, and he's going to do what all of us are doing, but he's going to do it this way, or much smarter than what we've done already. Are you confident that the 35% possibility of a hike is that too high?
Who knows? I think that's the point. There's some confusion. I'll talk about that in a moment. I think it would surprise me if they hike today for a couple of reasons. The last inflation reading was cool. I think there's a hope, and John Williams said it a week or two ago, that maybe the next couple will be cooler still. Some of the stickiness is due to a supply shock, not a demand shock. We don't have excess demand. We have huge CapEx, and we've got tariffs, restrictions on labor, we've got the oil spike. And I think Warsh himself has said, you know, Fed Fed rate increases don't work as well with a supply shock as with excess demand. So I think the ball's in his hands on this one. The committee's not going to push him to raise rates. If he wants to hold today, he can. He may get a couple of dissents. I think if you get to September and we don't see more improvement, I think there'll be more pressure that they'll have to act. And I think that's what the 1 and the 2 year are reflecting, not necessarily July.
Can Warsh ever get beyond the blunt instrument of trying to slow the economy to get inflation down? Is there any, or is that just the facts of central banking? Because it's not perfect.
No.
Is it?
No, and the truth is, while he has said that it's all monetary policy, the truth is other parts of the government, tariffs, immigration policy, what's going on with oil, regulation, have an effect. I think the issue for Warsh is he's gonna make some adjustments to the balance sheet. He'll do it over years. They'll speed regulatory reform. There'll be less forward guidance, which I think is good. However, I think he's gonna maybe need to explain himself a little bit more in terms of his reaction function.
Do we know what immigration policy, if you let in 20 million illegals, what does that do for housing prices?
Well, I don't think many of those people were buying houses.
They didn't need to buy them, but they needed to live somewhere. And what does it do to government spending and health care and food stamps? And I don't buy that curbing illegal immigrants.
I think the point is it's not just monetary policy. Okay. And so,
I just hear that a lot from the
Yeah, no, it's not just monetary policy. Having said that, I think some of the moves he's making make a lot of sense. And I don't think they should be predicting as much what they're going to do and boxing themselves in. Having said that, I think he's going to have to explain himself a little bit more, because this amount of uncertainty right before the meeting, I don't know if that serves us well.
Do you think, and Steve made the point, I don't know if you were listening, but this is the new, less transparent Fed, maybe? We're going into that period. Is this preferable to the way it used to be?
I think not making current commitments to what you're going to do in the future is preferable. Not predicting as much to where you're boxed in, that may be preferable. Maybe less information in the dot plot. Having said that, that doesn't mean people shouldn't understand your reaction function. I think he's going to have to explain that more. Or put it a different way, you've got a pretty unpredictable, you got a little more unpredictable administration and tariff policy and other things. You've got an unpredictable world situation. AI is inherently unpredictable. I think adding a more unpredictable Fed, I don't know if Kevin Warsh wants that as part of the mix.
But that's just the business of being a new Fed chairman and people having to get to know who he is.
I think so.
There's no way to avoid that without spoon feeding people again, which is exactly what he wants to avoid. We're going to go through a period of, okay, we're getting to know what this regime's going to look like.
I agree. So part of this is par for the course, and I'm talking over the next 6 months. I think you'll eventually may hear him explain a little bit more how he thinks about, for example, how does he think about supply shocks versus demand shocks? How does he think about the lead time for monetary policy? Those are things I think he'll explain more.
Can there really be a difference between letting the markets react to government data and trying to have people game how the Fed reacts to the data that you get from the economic? Because that's something that Kevin said he wanted to do. It should be a market reaction, not a reaction to what the Fed's going to do. It's the same thing, but you know that people are going to think what the Fed's going to do to them.
I think so. I do, and I think he'll realize that also. But yes, the market's always going to try to predict what action the Fed's going to
do. Have you heard when we're going to? I love focus groups and when we study things. Do you know when we're going to hear from the 5? What are they? They're task forces.
5 committees.
Yeah, they're task. See, we had task forces here. We used to roll our eyes at a task. These are better, aren't they? These are very
important people on these who have a good feel of the economy.
And there's been a lot of criticism of a lot of aspects of the Fed that maybe could be addressed by these experts.
So I think he has said that he's going to try to wrap these up by the end of the year, I've heard him say.
It'd be a new record for government testing.
Most of these people are well known to the Fed. Most of them we have had into the Fed. You call them for advice regularly. Having said that, to me, what he's saying he's going to do, which I agree with, let's take a fresh look. Let's take a fresh look at the dot plot. Let's take a fresh look at the balance sheet. I think that's healthy, and I'm glad he's doing that.
Waller said that we know all these people, we know exactly what they're going to tell Kevin Warsh.
Yeah, my attitude would be, if we want to take a fresh look and maybe make some changes, that's a good thing. And if I were there in my old job, I'd be on board for this.
Okay, very good. Thanks, Rob.
Good to talk to you.
Good to talk to you.
We do have some breaking news out of South Korea. The country's finance minister concluding an emergency meeting of financial authorities that started just about an hour and a half or 2 hours ago. He said that they will impose a cap on single stock leverage ETFs and increase the cost of trading those instruments. He also said that they will prepare for the legal grounds for measures to stabilize the markets in case of emergency, and they will maintain a 24-hour stock market monitoring system. All of this is happening as the Kospi closed down again, another 6%. For the week to date, it's down by more than 15%. It's 2 days in a row that they had to have the circuit breakers put on, and that's never happened before in Korea. So we will continue to watch this. Of course, if you look for the last year, that stock market's still up by, I think, or maybe even year to date by about 35%. But there has been some serious volatility, a lot of that driven overnight by SK Hynix and the miss that it had in its earnings. Up next, big tech quarterly results, the future of AI, and the latest on the tech trade. Kindred Partners founder Steve Jang will join us. The futures this morning again are under pressure here. Dow futures off by about 368 points, NASDAQ futures down by 100, and the S&P futures off by 14. Stay tuned. This is Squawk Box, and you are watching CNBC.
OpenAI says that the rogue AI agent that breached Hugging Face also hacked multiple third-party accounts using exposed online credentials. One affected customer used Modal Labs, though the company says its platform was not compromised.
Joining us right now from San Francisco for the latest in AI and in technology is Steve Jang. He's founder and managing partner at Kindred Ventures. Kindred's portfolio includes Perplexity, Uber, and many others. And let's talk a little bit about all of this, Steve. Let's start, though, with the news of the morning, and that has to be what we've seen with SK Hynix. This is just the latest in the questions surrounding AI and the build-out for that and what people think about semiconductors. Where are your thoughts around what's happening right now?
Well, I think there's several factors going into what is a very thrashy morning for SK Hynix and a lot of the chippers. One, we're seeing a lot of confusion around what memory chips are insofar as AI compute is concerned. So, number one, SK Hynix has fundamentally very strong numbers as of the print late last night. They are seeing 80% gross margins on memory chips, which is never before seen. They're having record-breaking quarters across the board. I think expectations were just very high. And number two, I think DRAM is a very large market with very different layers in it. SK Hynix represents HBMs, which is the highest bandwidth density and quality insofar as AI models and compute are concerned. And there's commodity DRAM by Samsung and Micron, which is one step below that in tier. And so I think that their position, SK Hynix's position in the AI compute market, is very solid for the next 2 years, and they're booked out with long-term contracts. So I think expectations were perhaps mismanaged. It was a little bit too high. I think fundamentally this is going to be, memory chips are out of the cyclical state that they were over the last 15, 20 years. And we're entering into a new state where it's sitting side by side with GPUs and logic processors.
Steve, a lot of the people I've talked to in the industry say, look, when you have margins that are 80% or north of that, you are incentivizing everybody else to come after your market. Your margin is my opportunity has been that old saying that's been, I think, wrongfully attributed to Jeff Bezos, because he told me he never said that. But when you have margins like that, the question becomes, how long can that consist? And if you have huge demand right now that you can't meet, will that demand still be there by the time you can build out to it? What do you say to those questions?
No, it's a very good point. I mean, that's a very apt phrase here. So let's talk about two things, demand and supply. So on the demand side, what we're seeing is from models and training and inference across the board, and the long context memory, the long context memory that is required for agents, whether it's coding agents or deep research agents like Perplexity, you're going to need more and more HBMs. And SK Hynix is the 65% market share leader in HBMs. Now let's talk about that long-term view. So you look at autonomy, Nuro and Uber with their robotaxi fleet, Waymo, Tesla FSD, they all need HBMs on board on the car. And so what you're seeing is in physical AI, robotics, humanoids, LLMs and agents, you're going to see demand that is going to 10x from here just over the next 3-4 years. That being said, on the supply side, let's talk about supply side. How can a competitor enter the market and compete with SK Hynix or another HBM manufacturer? There was a CXMT IPO in China that was well received and lauded in Shanghai a couple days ago. Now, can they compete? Well, they make commodity DRAM. They are unable to make the stacked die structure and architecture of an HBM. And so in the Intels of the world, they are not capable of creating HBMs at this quality level. So it'll be many years before there's a fab for memory chips that will be able to compete effectively in the market. And we're not talking about 1 or 2 years, we're talking about 3, 4, 5 years to even be able to enter into the market. The logic processors of NVIDIA, Intel, and AMD are very different all the way down to the fab and foundry level than they are from the DRAM side of it. So
but these are
I think
safer
on the supply,
investments, right?
yeah, I think, look, I think this is going to be a very challenging market to enter into. I think it's going to be a locked-in market on memory. I think what you're seeing today is a lot of unknowns around whether or not after the 2-3 years of sales shortage or supply shortage, if these companies continue to maintain these profits.
Okay, now let's talk OpenAI, this rogue agent that broke out and took off to other locations unknown. How big of a threat is this? How do you protect against it? And as an investor, how do you navigate that water?
Yes, the very interesting part about what we all saw coming was the idea that agents can be autonomous, right? They can self-improve, they can figure out solutions over a long period of time. And what we're seeing is that agents, when they're deployed, a human is in the loop by the necessity in terms of control, of policy, alignment, things of these nature. Now, one of the things to protect and balance out that ability to have a independent autonomous agent that's virtual and digital is to have a security measure. Now, in this case, it was a closed model from OpenAI that had basically jumped the boundary and had started taking actions outside of the deemed policy. Now, interestingly, in the open source world, there was a solution. So a GLM 5.2, which is a Chinese open source model, stripped down and hosted on US data centers, was used by Hugging Face to counteract and identify this breach. And so an open source model being able to do this in the place of using Claude or GPT models, which were unable to do it because of the alignment policy that they had around them, shows that there's a power and diversity of control and flexibility and raw usage that open source models provide. And so my takeaway from this whole situation was that open source models offer that diversity, offer that power and control to the end user, to a company, to be able to protect themselves in a cybersecurity environment and incident like this. And so that was a really interesting story here. And I think you're going to see many other stories where enterprises and developers are using open source models in unique and powerful ways that closed source models cannot.
Steve, thank you very much for the conversation. I've enjoyed it. We hope to come back again soon.
Thank you, Becky.
Oh, really?
Really?
We
That's
went.
your break.
Oh no, because I was going to do the Squawk story. Make sure you join us tomorrow. Squawk on the Street. It's coming up.
Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Pre-market a little skittish as the Kospi continues to plummet, now down 16% in 2 days. And the Koreans impose caps on leverage, hold some meetings on emergency measures. Got a Fed decision at 2 and Microsoft Meta tonight. Brent gets near 90 as we have now reported strikes between Iran and the U.S., Iraq and the Saudis, and Hezbollah and Israel. The president says the U.S. will hit Iran hard. Our roadmap begins with more cracks for the chips. SK Hynix reports its first earnings since making its U.S. debut.
Plus, Mark Zuckerberg criticizing Anthropic and OpenAI's approach to AI. He's calling for more openness. Of course, this as his company Meta gets ready to report its earnings after the bell. And we're going to get you set for the Fed. The markets are expecting Chairman Marsh to hold rates steady. That'll be a bit later in the day.
Let's get right to the markets and this weakness in tech. The Nasdaq's in the midst of a 5-day losing streak, and there's SK Hynix falling and missing lofty expectations despite a more than 550% jump in quarterly profit and revenue that more than tripled from a year ago. Jim, it is a miss on revenue and OpEx, even though I'm looking at DRAM ASPs up 30 quarter on quarter.
This was one of the most confusing conference calls I've ever been on. The reason why it's confusing is something that I learned from Micron and from Applied Materials, which you have these long-term agreements. This was by companies that are afraid that prices have gotten out of control. So what they do is they go to SK Hynix, David, and they say, listen, we like to have long-term agreement. SK Hynix has a long-term agreement. But the analysts themselves weren't caught up. And they were looking at the actual prices of DRAM and HBM and said, are you guys kidding me? You didn't make anywhere near what the spot market is. And they said, well, listen, we're not using the spot market. So the analysts did not see it coming. Now, how they could not see it coming is insane to me. But one thing that is absolutely certain that we better start getting used to is this Korean market is wide open, and it's very different from ours. And the analysts seem I don't want to say that they seem naive. There's a lot of action in these stocks. And just to give you a sense of why, of the leverage here that is just amazing, everyone has got something of this Hynix. You know, we have it here. The ADR is about to combine. But listen to this. The reason why they're worried is that there's a Korea 3X Hynix leveraged fund.
Okay.
This one was out of London. It was at 36 on June 22nd, 36.
Yep.
Now it's at 1.
Now it's at 1.
Now it's at 1. So, like, that's what they're trying to prevent. I mean, there's just it is the most gambling country I have ever seen.
There's a level of, there's a level of, or a very high willingness to use your words, gamble in the South Korean market to a certain extent. And there are products that obviously are fulfilling that desire, I guess, as well, that are available. That said, I'm not sure how much we should be playing off of the Korean stock market.
Well, I'll tell you how
SK
much.
Hynix we're talking about because it is one of the more important companies out there. It's certainly one of the leaders in memory. We know that. It recently listed, of course, here with a massive issue of shares as well. Yeah. They have been trading the U.S. ADRs at a significant premium still.
Well, it kind of flattened last night because we're about to have the same. Finally, they're going to be the same thing.
I see.
But Carl, what's going on over there?
There's the ADRs.
It's very different from here. The stock intra-call was down 12%. If you look word for word for where it fell 12%, it was where some analyst said, look, I don't know, it doesn't seem like it's that good. And then the company then says, no, it's actually okay. And then the stock goes from down 12 to down 6. And, you know, we don't do that. This is like when you're doing DraftKings or Kalshi, I guess, and you know it's the fourth quarter, and you decide, you know what? I think the Browns are getting a couple of garbage touchdowns.
Yeah.
I mean, this thing was amazing. Now that maybe this has been going on the whole time because that market's been incredible, but we cannot afford to import what they're doing.
No. Although even though this morning they had this emergency meeting, the finance minister going to impose caps on single stock leveraged ETFs. Jim, I mean the Nikkei hasn't been exactly a star themselves.
No, but
and the BOJ's Friday.
They need to protect themselves from themselves. I mean, because I don't know how you can handle these kinds of losses. Now, I would say, David, if you do take your cue from them, okay, then you think that things aren't so hot. You basically think that, you know what, maybe DRAM prices are going to come down. Untrue.
We should take a moment here to remember that they did make $64 billion in the quarter. at SK Hynix.
Well, that's why it
which
shouldn't
was
have been
more
down
money
12.
than they had made in the last 5 years.
Well, that's why it shouldn't be
total,
down 12%.
And was 13 times what they made in the year ago.
Why
quarter.
should it be down 12% in a quarter? I'll tell you what's going on over there. They have individuals, I swear, who are on the call, who are listening to the call. This is not, they are in the most professional element, and they are making decisions as if they are Hall of Fame players during the conference call. And I've like never seen anything like it. And I'm sure it's been going on for a long time. I've just been naive about it. Where people who don't really understand our business, don't understand long-term agreements, don't understand the spot price, are just making these bets on every word. And that's what's going on, and we don't have that. So I don't want people to think, wow, maybe things have like gotten bad, because that SK Hynix, as David says, it was a good quarter.
No, I mean, over here, the domestic story is more about Vertiv missing on revenue, this downgraded CAT, which gets exactly to the discussion the three of us had yesterday about data centers.
Baird was late to the big run, but they go down, they downgrade, yes, and that does matter. I have Vertiv on tonight.
Yeah,
we got to clear that up.
All right.
Yeah, because Vertiv says what I was saying last night. Vertiv basically says, hey, look, there's a possibility somebody paused.
I don't see
I don't see the pause.
Wait a second. You spent yesterday talking about the fact that you thought this very thing would happen, and you're saying today you don't see the pause?
No,
you had all these people selling stocks yesterday.
Because we don't, the one that might pause hasn't talked yet.
Microsoft.
That's what I'm talking about.
I think a lot of the sell-off is not due to worries about a pause in spending. It's just due to these Chinese open models taking market share significantly from key players here, and what that will mean to the ecosystem.
Like Zook saying open models. Go back to the Sembles piece. There are like 15 companies that are open model. How does OpenAI make its money if they indeed have an inference open model? That's again one of the questions that I've been raising.
And it's a good question to ask. That Kimi 3 model was very powerful, very well reviewed, open source. I mean, you can take a look at what's happened to stocks even since then.
Make a fraction.
Obviously, the reversal that we've had since the beginning of the month of July has been very significant. I don't know exactly what Goldman Sachs' unconstrained momentum basket is, but I do know that it's had its worst losses since the financial crisis.
Unconstrained momentum.
Yeah, they come up with these things, but it does point to all the products. By the way, you were talking about products in the South Korean market.
Yes, I was.
We have plenty of them here as well. The various baskets that can allow you to play different things and
MU times NVIDIA.
So you've got the high beta momentum pair. The point is, this has been a really rough go for hedge funds, for example, these last few weeks.
And that's why the
these Chinese open source models may be one of the key reasons.
Yes, that's why you referenced. No, I referenced your tweet about your ex about the Financial Times five reporter story about increase in leverage and how Goldman's worried, but they should be worried.
That is another element of this.
Well, it's not.
We all worked and lived through the financial crisis. Right. We also all worked and lived through the dot-com bubble. That's the one that comes to mind much more often.
So I'm going to ask you 3 words.
Not that it's the same, but there are certain things.
There are. Well, that's what I've been. Thank you for saying. That's what I've been worried about. That's what was the Sembles piece.
I know, but I don't think we're going to run out of capital the way you were talking about yesterday. No, I don't think necessarily that anybody's going to really pause their CapEx the way you
doesn't get the inference, they get the open model, the margins get hurt. Yes. So David, I've got. Let's see if he remembers, because he's not been getting these references. 3 words. Is it safe?
I do know that one.
It's so safe you can't
even believe it. Is it safe?
Marathon man, yes.
Well, you're supposed to say yes, it's safe.
Yes, it's safe. Don't pull out my tooth.
Because then I'm saying no, it's not safe. And who was the dentist? Oh my God, the greatest actor in history.
One of the greats. One of the greats.
Well, to your point about money running out, I mean, the CAT downgrade is more. It's not about money running out. It's about Texas and New York putting the brakes on data center development.
Yes,
not a blue state
and don't
issue.
forget, you got Sherrod Brown, one of the great Luddites in the history of the Senate, is saying, listen, we can't have. He's talking about these guys ripping the people off. In the meantime, there are things like what Chris Wright wants, good friend of Brian Sully, and I think Sullivan's got a great stuff. They're opening
the energy secretary you're talking about?
Yes, Brookfield has, there's a giant plan of spent uranium that's been available for years. Large area near Paducah that if you go there, obviously you lose your hair in 30 seconds. But they've got a chance to be able to build one of the biggest plants ever, and they're going to. For a lot of gigs, David, ton of gigs.
Well, wait, I mean, let's not forget Monday's story, not ours, but the Journal story about 10 gigawatts. I can't even, if it was April Fool's, I would have thought it was actually 10 gigawatts. We're going to spend $500 billion.
Well, that was
We're going to pray that a hurricane doesn't take it out.
Yeah,
10 gigawatts.
Yeah, well, that was one of the things I didn't like. Now, Brookfield teaming up on $100 billion on the Sutter, Kentucky uranium enrichment with NextEra, the largest utility company in the country, and it's barely mentioned. And listen, David, I'm going to quiz you again.
Okay, I'm ready.
This is completely worthless. I just like it.
Because
Bell likes it. His mother likes it. So,
Yes.
how many gigawatts is Ford going to do next year?
How many? Sorry.
How many gigawatts is Ford Motor going to do next year? Farley's got 20 gigawatts going. 20 in Ford Energy. Farley is back, and he's bigger than ever.
Second upgrade of the week, I think, for Ford.
How to respond to that?
I love that upgrade.
Today out of City.
I love that upgrade. I shot him an email, congratulations, because I've been hyping Mary Barr like Uber. I mean Uber, a different company. But I think it's Farley's turn. Farley's turn.
Over GM would be your near-term favorite.
After the run, GM. I think it's unconstrained. What was your thing?
Oh, the unconstrained momentum
momentum. The unconstrained momentum basket. It cannot be constrained. You can't constrain this momentum basket.
Well,
except when it goes down 40%.
How about the unconstrained momentum of the last week of February of 2000?
Yeah.
Unconstrained.
Yeah. Well, there you go. You keep making those little references. I picked up on that. Yesterday you made one to March and April of 2000 as well.
You said we'd be safe in Philadelphia. Which one's that?
That's Witness.
Oh, man, he's on his game.
Oh, man.
He's so on his
Whatever's
game.
left up there is...
Where's the knife? I want to cut his nose.
Take a look at the pre-market. There is a Fed meeting today, and you got the 2-year 4.31 as we go into what might be the most uncertain decision in several years. Also, oil, hard to get some rotation working with oil back to your 90 on Brent. Stay with us. WTI and Brent are surging this morning. According to Fox News, the president vows to hit Iran hard after the U.S. military said it intercepted ballistic missiles launched by Iran toward American forces in the Middle East. Meantime, the Fed decision at 2 o'clock today, followed by the chairman's news conference a half hour later. Goldman out with a note saying, quote, the repricing of Fed hike risk has set the stage for today's FOMC decision to deliver the largest non-cut meeting day surprise in almost 30 years. Watch our special coverage of the Fed decision beginning at 1 p.m. Eastern time. Jim, odds are still around 30%, but we'll watch Hammock and Logan for possible dissents.
Yeah, I mean, I had Nucor on last time, which is our nation's largest steel company. And Leon Topalian, who's the CEO, said it's the greatest demand for steel 30 years. Maybe all time, but 30 years that he's worked there. And it's very hard for me to believe that you could have an economy that is slowing if you have the fastest demand for steel in the history of this man's tenure at Nucor for the last 30 years. I just thought it was a very good data point, which said, you know what, you got to at least be thinking that if oil were to go up, we could have a lot of inflation. I like that oil was coming down, but when the president, by the way, the president's message, just because I don't know if anyone's actually heard it out of Fox, you can't play
You can't say it.
You can't play it.
Oh, I didn't know that.
Yeah, you can't play it without getting fined twice.
Why? We're cable. The FCC doesn't regulate us.
Why?
We can play it.
You're trying to bait me.
We can play it.
You're going to try to bait me and you're going to fail.
I didn't know. I did not see that. I do wonder what you think Mr. Warsh is going to and the committee is going to choose to have done, and or how they're going to communicate, if they communicate at all, if he does today.
Well, I would say, look, if we have another quarter of elevated oil, it's going to start going right through.
I remember.
We're going to see 4, 5, maybe 6% inflation, and I think he has to say something about that. Because I thought that oil would go down. I mean, obviously the hardliners in Iran are very similar to they're guerrillas. I mean, they like to have the guerrilla tactics and going in. But maybe they just read the papers where we said there are not enough missiles. Whoever put that story out, I really think that's that's kind of like that was like what Oliver Wendell Holmes said. You can't put the
Reuters piece this morning says the Iranians are watching videos posted by soldiers themselves in the Middle East to determine the effectiveness of their strikes. I mean, that's the crazy part. It's not just people leaking to newspapers.
No, well, that's true. I mean, they have more missiles per people than any country I've ever seen. That is just a missile. That was like a missile.
I thought we wiped them all out. Wasn't that? Didn't we completely destroy their capability?
As John Book said, you're wrong.
Well, it wasn't me who said
We
it.
didn't completely destroy it. Come
I'm
on.
saying that right now,
Thank you, idiot.
They think that we don't have enough missiles. Maybe whoever put that story.
All right. Well, Iran decided to go ahead and shoot at us again. So I don't think this is going to be a good thing. So pray for any innocent people that get hurt. But it's time to do the job. Can't trust them. You just can't do it. I never have trusted them. Never. But these people are terrorists. Good morning, Rockstone Jim. Let's see what we got. We got 10 minutes. I need to take off. We're at support at 1 in a way. And we broke 1 and we got an inverse head and shoulders here. We got head and shoulders there. So could have a triple bottom today. And that'll be your support level to hold. Could have a quad bottom. 1, 2, 3, triple bottom yesterday. And then come back down for a quad at 736.70. Right there. 737. I'm going to set an alert. I don't want to get in a hurry today. We got Powell. So I think we pull back and hit this support level. And then, not Powell, but Munchkin. Merchant, whoever his name is. I'm looking forward really to this. They say that this guy needs to do something. And I say, no, he doesn't have to do nothing. Wait until this conflict, till we really start hurting. If we do, I don't think we are. I mean, 1 week consumer confidence is up, another week it's down, another week it's back up. Wall Street just doesn't have all them trillions of dollars being printed for them like under Biden. Talking about Seagate, that's another one.
And it's up 414. So you have a lot of people saying, "Wow, you know what? I've gotten the opportunity to make the sale that I didn't make when it was here." Okay, and you have other people say, "You know what? The decline is over. We're ready to resume." Now it's a parabolic move. Typically, a parabolic move is followed only by this, and then you don't get another
50%.
parabolic move back. So even though Seagate was a great quarter, I would say it's a push.
Thank you.
That was push.
Excellent.
Yeah.
Excellent work on the telestrator there.
You have a king, you draw a 9. Dealer's got 19 too. Doesn't have 20.
Right.
But it's 19.
All right, we'll keep an eye on Seagate. Of course, it's got an opening bell about 6.5 minutes from now. Don't forget, of course, you can catch.
Now, my opinion on Seagate will be a lot different than theirs. Go to the weekly, and I asked myself, $62 all the way up to $1,145. The running started during Trump with a double bottom at $72. It run up to $11.45. Yesterday I talked about this trade. I said we were at a support for scalping, but the strong buy is either here or here. You know, you got to ask yourself about irrational exuberance. And that's what happened here with a lot of these stocks. They just ran through the roof. And I fought it all the way up. I said, man, I'm bullish as could be in this market. As I've ever been in my entire life. But there's a point where you got to have some kind of pullback. And this thing run from $72 all the way up to $1,145 under Trump's watch. I think it was a pump, just like NVIDIA. The analysts are going to come out here and start upgrading it at this level. We have a triple bottom on the wicks at 700. So that could be a possibility. 708. Triple bottom. And right now we're at the 100. So this is a scalping area. And you see a resistance in between the gap right here on the daily. So this could run up to around 791. You're a new listener? What video can I watch to understand your sneaky snake? Well, let me find one. Let me see. I got 3 minutes. You want to find out about my sneaky snake? Let's start off with this one right here. I got 2 of them. So these are the 2 I want you to watch. If you can count to 3, you can trade with me. It's all about chart patterns, moving averages, and being in the now. So we'll put this one here. That the stock's bullish and get ready for a revert. I'm a knife catcher. So I trade off chart patterns. This is an expansion pattern. And all you got to do is learn how to count to 3 and 4 and look for the sweet spot in these patterns. Once you start realizing where the sweet spot is, and it doesn't hit the sweet spot, like on a baseball bat, then you know you could hit a foul ball. So it's all between the numbers of 3 and 4. It's real easy to understand. That's just a recent one. Here's the chart patterns. We go. We're open. Okay, we're open right below support on the SPX. Just right below it. Right below it, just a smudge. Now I got to be a little patient today. Got to be a little patient. We're coming down to a double bottom. 74.39.91. They're expensive today. $7.44 strike, and if this $7.43 comes down to a price where I can buy 10 contracts. We got a huge drop, and this is your second. We got we got three supports. One right here. Another one right here. Okay, we're coming down on the first one, and then the last one would be the triple bottom. Now I'm going to move these up to 743. I want to stay in the money, not in the money, but there it is. $117. The 743 strike. At 130. I mean, I'm out at 130. I got a few left. Now you're hitting a 63 on the exit idea. Exit idea. You're hitting 63. Whoop. Out. $156. So this is where we closed at yesterday. Dang, 160. I'm going to talk about this trade. A lot of people don't pick this stuff up. And the more I talk about it, the more you'll understand how solid supports are and how weak supports are. Once you get a grasp on how strong $735 hard support. Okay, let's talk about this. So we had a triple top breakout. Let me get rid of this here. We got triple top on Seagate. So we definitely knew that this is a solid support that's been going on this week. So we still have the opportunity of coming down here and meeting this. I'm not bullish, right? I mean, I'm bullish, but I'm not. I got to wait for whatever his name is to speak. We all week for the last month, 2 months, these idiots on here, all they talk about is interest rate hikes. They never brought any, this new guy doesn't want to do that. And I explained yesterday about how they acted during the Biden administration. Just the opposite of the way they're acting right now. One minute they'll tell you that the economy sucks, and then another minute they'll tell you that it's too hot. It doesn't make any sense to me. It's like I told the lady at the grocery store today. I said, last week hamburger was at $7.50 a pound, and today it's at $5. I said, your pricing here sucks. That's exactly what I told her. So I'm not, I can't shop here not knowing, get stuck with it, I could save 30% at Walmart. And I did that last week. I spent $60 and I usually spend 150, 120 to eat. So we pulled back. You see this area right in here? Resistance, 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 resistance. That's called a pivot point inside of the Darvis box. So that's like a solid support. And if it goes below it, it could easily shoot on down here to 74.02. So I got my trade in for the day. I was talking to a guy that's a multi-millionaire. From $1,000 that I traded with. One trade at a time. One trade a day is all it takes. People get caught up over trading. If you're a rookie, you got to wait for the right time. But I took the chance on this triple top with a quad breakout. So I've always said, if you can count to 4, you can learn to make a lot more. 1 wick, 2 wick, 3, boom. And then we had that big breakout on that pullback that I called yesterday. So that's on the 5-minute. Traders like to trade on the 2-minute. You had Doji there. It's a shooting star. What the hell? Well, computer's getting fancy. Pretty sure it was a shooting star. They got like inverted hammers. That's more like it right there. A little bit thinner body though. And then the 5-minute. I already said the 5 minute, the 1 minute. Now the 1 minute is the most bullish of all the patterns. We got a tweezer bottom, 3 black crows with a tweezer bottom to a double top with 2 of these inverted little whatevers. And I just got an alert. So I got a message board up here, HUM. HUM's got earnings, I think. Upcoming earnings, where's the 27th? Was it last week that had HUM? Sophie's down $1.61. Yeah, HUM. HUM had a pop, had earnings. Yeah, I thought it had earnings. And we got Meta tonight. Meta earnings tonight. So watch Meta for a reversal today. Okay, they've got great, they're bringing money in from their ads. Again, idiots. CapEx. I want to make this clear. If you're a big company that has billions of dollars, billions, over 20 billion, you've got share structure you can raise capital on. We're not even in the 3rd inning yet. The spending can go on until 2030. I disagree with all, but the weak won't survive and the strong will. Unlike what happened during the Biden regime, when we were throwing billions in weak companies that still will have a hard time surviving. Billions. So the stronger are going to be the ones that survive. Meta, I'm going to watch Meta, see if we get a double bottom here. Could trade SPY again too. We've got 3 black crows. So the new one on YouTube, I do chart patterns and candlestick patterns. These are called 3 black crows. 3 black crows, and we consolidated with a big engulfing candle for the exit idea to the 21. So now we've got 3 black crows, and we're coming into a double bottom. I want to watch this candlestick right here. This is the main one I want to watch. I want to take this trade. And they're freaking expensive. Jesus. Oh my. Yeah, there's, for some reason they're expensive. I might 640 strike. God, it's still way too far out of the money. Jeez. That sucks. I'll just go back to trading SPX. They're just too high. I don't know why that, but they are. Trying to keep you out of the trade. But that's the setup. This is called Three Black Crows with a Spinning Top. Now, if that candle would have went on the inside, that'd have been a hard money, and that would have shot up. We got a tweezer bottom, just like we had over here. Shit. I ain't gonna pay that kind of price. Tesla went from 302 with a double bottom for after hours to 309 with a double top off of a wick. Now we're at support. Got an inverse head and shoulders. I loved that video Elon did of the liberals yesterday. I mean, everything they talk about is Hitler driven, except probably from the open borders. I don't think Hitler would have allowed that. We got a triple bottom on Tesla here. The 310 strike at $1, or the 305. Actually, I mean, 310. Let's see what it looks like on the, oh, that is the 1 minute. Look at the 5. I don't think 5's going to tell me much. Not just too early into the day. Yeah, the 5 broke. Well, the 5 told me that it broke the inverse head and shoulders. And we got a triple bottom at 302. 303. So we'll get in this here trade. I saw 93 cents. Now it's at 10. Shit. Man, I missed a good trade there. 93 to 113. I knew a triple bottom. So that was a triple bottom on the 1 minute or 5 minute. No, that was inverse head and shoulders on the 5 minute. It's the 310 strike. Perfect setup right there. Dadgummit. That'd have been $400. 10 contracts at 93 to 133. with your campaign. There's another chance to get in at 117 to 130 on that pullback. So if it breaks, we got a wall, the 63, the 200 EMA, and the 200 SMA, and you got an inverse head and shoulders set up. So I'm gonna, wow, what a delicate piece of crap today. Prepare ye in the name of the Lord. Triple bottom. We got a triple bottom on the wicks right here. 102. I'm in a delicate piece of crap today. It's got a hold right here. Tesla. Now, when I trade Tesla, I'm going against 75% of the people on Wall Street. When I'm trading Tesla, I'm going with 75% bulls on Main Street. So we have a little issue between Main Street and Wall Street when it comes to trading Tesla. They'd rather put $8 billion in a failing company like Rivian. $108. Okay. Probably got it in the wrong spot here. $108.99. And I got 10. This is a tough one. This is a controversial trade right here. I want to get in and out real fast if I can. If not, I got to stop out. I'm not going to let this go below this red line. That's probably what I should have waited for was that. Got a little bit hesitant. Okay. Not good. See if there's any cleavage in here to save me.
To apply to something that's never. I have a couple analysts that are friends in the industry.
Take away from second quarter earnings. Wonder what this guy's going to talk about.
Start to see it pay off a little bit more, and then rate re-rate.
Yeah, and after the bell, Meta, Microsoft, ARM, Qualcomm, Lem Research, Chipotle, Agnico Eagle.
I like that top. That'll work.
Sterling.
Final quick thoughts. Play it
Too
safe
much.
today. I think any upside right now in the market's going to be capped. The downside could prove to be a little bit worrisome here. And we'll just see where we are in terms of this spin. Eventually, this AI is going to have to hit the prove it.
They're definitely pushing it. They are definitely pushing their luck. They did this last time we dipped too. I mean, I had the hardest time convincing people that we were going to go up. They did the same crap, but even thicker. One good way of finding out if you're at a support or not, when you're in this kind of market, is pull up the yearly time frame and the weekly. So we're closing in on the 200 SMA on Tesla. 200 EMA, 200 SMA, 200 EMA. And then this here. I'm at 102 now, 104. But pull up your stocks and look at the weekly and the daily and see where the 200 SMA is, the 200 EMA is, and the 100 EMA. On the weekly and the daily. I'm at 114 now on Tesla. See, exit idea. So I'm going to go ahead and get out of this trade. I think it can break, but I want to get out and I want to lock in. $116, 17. I mean, scale out. But I'm going to talk about this trade. I was talking about it, but I want to talk about it again. This is why I like trading the 1 minute. I'm going to look at the 5 minute and see if I would have took that trade. I took it on the 1 minute. This is called a harmony. So when that candle finished, that was an inside candle to the third crow. Then you had 3 white soldiers to the 63 EMA and you're out of the trade. You don't think twice. Not on a day like today when you got the Fed coming out and we're attacking Iran again. This could probably break out. So that's the 1 minute. Now what if I took that trade on the 5 minute? We're going to see. I'm going to be totally honest with you. Yes. Yes. I would have took it off the orb. If that wick was down there on the orb, that's bullish, that's bullish, that's bullish, that's bullish, that's bullish, that's bullish. Every one of them candles are bullish. This one's undecisive, but these are all bullish. So I would have took it on the 5, right there. Maybe. Definitely would have took it on the 1. Two minute, I would have took it. So that was Tesla. And then we got Meta. Tonight we got earnings. I forgot about keep an eye on Meta. Meta's a chain. What's going on here? What have I done? Oh. Cancel. I missed that. We got a wedge or bull flag. Yeah, bull flag. This is called a bull flag. On the 2 minute, and then you got 3 white soldiers breaking out, and that pull back there with that hammer was where I would have took the trade. Comes back and retests the previous resistance. Baba, I think Russia's in hot water with us. China's kind of keeping out of it. But I mean, we're not going to be like Biden, have Putin threaten us with nukes. I don't think you'd want to say that to Trump. We got Tilray earnings coming out this week. When I said I've seen days a whole lot worse, being threatened with nukes, I think that's a little bit worse. Microsoft, the dips are a buy. Oh, look at there. SPY hit support. Wasn't even paying attention. Oh, man. Perfect. That's what I called. Ah, gummit. That pissed me off. How much was it? It got down to 72. Okay, I'm still safe. There's the right shoulder. Okay, prepare ye in the name of the Lord, Randy. $0.76. Here. Double bottom, higher low. It could dip, we could dip more. I mean, I'm not, like I said, but I'm going to try this. Oops. The 743s. Triple bottom, double. What is this? Double bottom. Strike 743. This is a risky trade because of the uncertainty today, but I'm buying this bottom. 76 cents. Let's have a good bounce. And Cindy, what do you got? Resistance? K and I? That's also resistance to break. Oh, that's someone else in another room. Fuck. Well, I got stuck in that. I don't know if there's any way out of it now. I knew we were going to come down more. Yeah. Well, well, well. You can go back, Bob. You can do that. Yeah, I'm gonna hold on. It's not really a good day today, so we got to be real careful. Come on, baby. You can do it. Tweezer bottom. $0.60. There, right there. 0.60 and 76. Come on. Don't lose it. About ready to boogie.
The worst momentum months of all time so far for July, but I want to take a look overseas because a big part of this story.
Big part of this story is overseas. There we go. And there we go. Come on, a little bit more. Come on, I'm green, I'm green, I'm green. Break it. It's a toughie. Oh, man, this way. Break the 9.
Be in the U.S. when the streets close because of our natural gas. Keep in mind it's below $3. The ratio's 6 to 1. That's $18 equivalent for oil. So we have the cheapest energy in the world in North America. Huge competitive advantage, and it's why the U.S. is a safe haven. It's one of the reasons, big advantages we have over the rest of the world.
Jay, it's never enough time. Look forward to continue our discussion here soon, but we'll leave it there for now. Jay Hatfield, CEO, CIO, Infrastructure Capital Advisors. Coming up, we'll get a closer look at the big picture with the team from Charles Schwab. Morning Trade Live. We'll be right back.
On the floor of the New York Stock Exchange, when markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going?
It's going pretty good. 6-8. Come on. Give me a little bit more. can do it. I try to get 6, 7. It's how cheap I am. I get out even right now. We're still bearish. We're kind of bouncing above the 9, but I'm fighting with bulls. I mean, the Wall Street. I'm 68. I can get out now. It's having a hard time breaking this resistance. This yellow line. 5 minute. And I take the SPY, yeah. One minute. We had a triple bottom on the 1 minute with a possible squeeze. The 21 becomes resistance. So if it breaks the 21, I'll become very bullish. My hair. Oh yeah, I'm gonna check TURB out. It's probably not doing too good.
Lots going on, but FOMC more in focus, I think, with new leadership. Is that safe to say?
Yeah, I definitely think it's safe to say. And this is a pretty unusual situation. We're, less than 4 hours from the Fed announcing where it's going to go on monetary policy. And I think we genuinely don't really know. The market isn't sure. I'm in the camp that I think the Fed is likely to hold.
Yes.
But there's certainly a camp out there that thinks that they may increase rates.
No, they're not going to do that.
This is what Kevin Warsh wants.
You're not going to increase rates on uncertain times.
Things are
Dumb.
going. He thinks the Fed over communicates, and he's not a fan of forward guidance. So that's what we're getting here. We're getting no forward guidance, and we'll see where they go.
And that's the way it should
really
be.
Interested in is how many dissents are there among the committee. I know Kevin Warsh would like these first couple of meetings to be as unanimous as possible, but I think whatever way they go, there's potential for a couple of dissents.
I think.
And then finally, what does he say in his
Whatever
press
his name
conference?
was, I
It's become
forgot
kind of
his
a joke
name,
here in
Powell.
Washington, and I
Was
think
in
on
bed
Wall
with him.
Street that he says, well, there's a task force for that to just about everything. Reference to the 5 independent task forces that he has set up to look at Fed operations. But I really think that does sort of give him this buffer to kind of deflect questions and say, hey, we've got a committee looking at these things, and we'll be back to you in a few months. And we'll see if he takes advantage of that and sort of doesn't give us much in the press conference.
Nate, some of this is going to be skewed just simply by what's going on in the markets in general right now. You got a momentum unwind. You got a war going on. You got big tech earnings on the calendar. But given some of the things that Mike just laid out, Fed alone, does it sort of shift what the volatility is around these events, where now the event itself is like the volatile moment as opposed to all the speeches along the way throughout the quarter?
It's an interesting transition over to Warsh just because of the opaqueness. His stance that he doesn't really want to do what his predecessors did. He wants to, have these task forces, et cetera. And so that in and of itself, I think, just kind of is the market is preparing, so to speak, to potentially get some kind of a rate volatility here in the next several months or so. And if you look at the VIX, it's kind of reflecting some of that. I guess that there's, maybe 3 points in the VIX, maybe 4 from a little bit from Warsh, but more from what's going on in Iran there. Just because if you look at the S&P 500 at the index level, the historical realized volatility, we've only had like 1% greater changes or more over the past month or so. So I just think, this is just one element here, the potential for rate volatility. And Alex, I'll just say from price action, when I came in on Monday and I noticed that we had this potential, we won't call it a ceasefire, but just a pause to have talks. Oil was down big, and the 10-year was down like 2 bips. So there's some buoyancy. There's some maybe a little bit of tension around the rates. 30-year is up near cycle highs. It's 520, I think, is the cycle high. Of course, for the 10-year, that's around 5% or so. But there's a little bit of tension that I can see in the price action in the Treasury market.
Yeah, so much of it's that rotation under the surface, guys, as well. VIX EQ 47.5. So your average S&P 500 components volatility 47.5. Where VIX at the headline index level about 20 here in real time. But Mike, I want to get some thoughts, sort of midterms, general Congress tensions as well. But just to close the loop on the Fed, do you think from a, kind of a general, ear to the ground in Washington, there was clearly a surprise at the sort of hawkish vibes behind the first time we heard from Warsh, but do you think it makes sense now in hindsight, maybe this desire to establish credibility if he wants to make pretty wide, ranging changes and reforms?
Yeah, I think it does. I mean, I think he's been clear that he talks about how he wants a good family fight in these meetings. I think that's absolutely what he's getting. There are a wide range of views right now. You're going to have several members, I think, who are going to push in this meeting for a rate hike, but maybe he is able to kind of tamp that down for now. I think if there is no rate hike, then it, of course, puts a bunch of pressure on September, and we'll see, exactly what happens. There are 2 jobs reports, 2 inflation reports between now and the September meeting. Those will be really influential. But Warsh wants to put his stamp on things here, and he wants to indicate that he's changing.
This is what gets me upset about my local grocery store. Hamburger last week per pound was $7.50. Last week. This week it's at $5. This store up the street was bought out by a joint in Chicago. I went in there last week and I told the manager, I said, I spent $1,000 in this store a month. $900 at least, $800 to $900 in this store a month. I ain't buying another damn thing out of this store until they get this hamburger down to a decent price. And I'm not the only one complaining. $7.50, and you go all around the town and you can get it for $5.50. This name of the store is called Price Cutter. They were bought out from some other joint out of Chicago, and all they've done is just, this hamburger right here, before Biden, $6. I could have got this for $6. Then it ran them all the way to 25. Now it's at 12. And it was at 25 for years. And they had so many price sales tags in that store today. I couldn't believe it. I don't think I have that much stout.
But jokes aside, guys, Nate Peterson, Mike Townsend, always a pleasure. Good to catch up with both of you on our big picture panel. Coming up, it's time for the morning trade. We're going to get a closer look at Ford, which received an upgrade post-earnings. Morning Trade Live. We'll be right back.
Ford probably pulled back. No? It held up. Oh, FSLR, First Solar.
Stay markets. Download the Schwab Network app.
So someone on YouTube asked me.
Wherever you are.
Someone on YouTube asked me about other stocks. I'm scalping the dips. a month ago, I wasn't going to try. I called them to pull back, and I don't want to trade these big tickers when these fat cats are just as bearish as I've ever seen them. They know that the market's way overbought. And I do too. I'm pointing out stocks that run 1,200%, 2,000% here in the past 6-7 months. So I don't want to be too frisky. And I want to take all my good-looking tickers that I have right here, and I want to change this chart. I'll tell you when I'm going to be ready to go long. Oh my. Like right here, First Solar, it's ready to bounce. Support off the 200, support off the 200, support off the 200. So when we were up here at the double top, I was telling people, when you're in a correction, look for the 200 SMA and the 200 EMA on the weekly and daily time frame. So if you got tickers that you really like and you're watching and they're your favorite, pull up the weekly time frame, stick the 200 SMA on there, stick the 200 EMA on there, and stick the 100 EMA on there, and you'll find support levels. But here, I can just go through my watch list. I'm bullish. I mean, this is where I want to be in the market right now, to where I start wanting to buy stocks long. And I haven't been buying stocks long for a couple, 3 or 4 weeks, trading these other ones out. And I trade the SPY and the SPX every day because I know they're true, for sure, winners. So we're going to go to my watch list. This is the one that I've been trading for the last 2 to 3 years. And I add and I subtract, so they're all my favorite tickers. And I'm going to go in there and cook a hangers. So we got Intel. The first moving average is a 63. We had a parabolic run on this trade. So we got a triple top breakout. This is the time to really be working hard and going through your watch list. So you want to set your alert. So this is called a triple top breakout. I'm going to thin this down a little bit. Ah! I didn't put it fault. So that's body, wick, wick, triple top. So you put your support right there. Intel at below, and I'll wait for my message center for that alert to trigger, because I believe in my chart patterns. I've got a 90% win rate. I would have a lot less win rate if I didn't buy the dips of stocks I was in. They'd be a lot worse. Not a lot worse, but it would be probably 2 or 3 more trades a week that would go red on me. Or I'd probably sell more than that. I'd probably get in and the first time I see a negative number, I'm going to get out of the trade. But I don't do that anymore because I've lost so much money doing it. But I'm really dialed in on a day like today. And it's one of them days where you're going to do all your homework. So we go to NVIDIA. This is the weekly. Now if we went to the yearly on Intel, I'd want to raise that alert up just a little bit. Raise it above the 200. So this is getting ready. This is getting ready. This is what you got to learn. I'm going to raise this up above the 200 EMA. There's a gap. Here's a gap. Here's a gap right here. So this is a solid support. Ups. This is a gap. Okay? We're going to put a price line. This is called a gap trade. I'm real good at these. I want to take it to that body of that candle right there. So this, I mean, we're real close to support on Intel. I'm really liking this. If we're bearish, I don't even know if that'll trigger. Okay, I got my alert set. But this is called a gap. A lot of times they'll hold that gap and bounce back up to the previous resistance support. Or they'll fill the gap and then the strong buy right here. I'm going to show this off. I mean, this could be a good trade. We're really close to a lot of supports, and I've only went to 2 tickers. And I was acting like this last time we were at the dip when I did the video of the 200 SMA and EMA, and we had that enormous bounce. Look, 200, closing in on the 200, closing in on the 200. NVIDIA, we're at the 200. These people on Wall Street are not going to tell you that. They used to. When I first started trading, well, they all came out, we're at the 200 SMA on the daily. This is looking good. They don't do that anymore because of the retail trader. I have it in for them. But they used to always say, we're at the 200. 200, 200, 200. Head and shoulders. 200, 200. Strong buy for swing. Apple. 200, 200, 200, 200, 200, 200. Well overbought. Hasn't been out long enough, but I did call 110 on it. So we want to take this to the weekly. This is Netflix. I gotta go get my burger. We're at the 200. They're all at the 200. I'm gonna go into another room real fast. And I'll be right back. Let's see if they're... Aloha. Washboardjim. All right. Can I give a good message real fast? Do it. I love you. About, oh, what was it? About 6 or so months ago when I called the bottom on IWM. Do you remember that? Yes, I do. So this is one way of knowing where you might be in the market. And I use this moving average quite a bit. And that's the 100, or first your 100 EMA, and the 200 EMA, and then the 200 SMA. And then any of your favorite tickers, pull up the weekly and the daily time frame. See where your candlesticks are closing in on that 200 SMA or 200 EMA on the weekly and the daily time frame. And that'll give you some kind of idea if you're still bullish or bearish in the market. Once you go below the 200s SMA, you start to use that 200 SMA as a resistance level instead of a support level. So that's one good way of trying to figure out where you are in the market. The last time we called the IWM was off of a head and shoulders off the 200. And that was a head and shoulders plus you had the 200, and it bounced right off of it and bounced right up. So that's just kind of a little hint to kind of figure out where you are maybe in the market by using that weekly, and even go back and use the monthly and the yearly candlesticks sometimes, and use the bodies of them candles to see when you pull down to a support level. But I just wanted to throw that in.
I love that. Thank
Yep.
you very much for the lesson.
Oh yeah. I'm gonna go back to my room.
We love Daddy Jimmy.
Yay. Yabba dabba doo.
Yabba dabba doo. Thanks for popping in, babe.
Yes, ma'am. Bobo's back. I think. Yay? Where am I? I'm here. Boom, be back.
Always clean?
Fuck. Got AMD at the 100. Netflix was at the 200. Now it probably broke out. Now it can come up to the 200. This is going to be an example of resistance. So we got example of resistance level on now to the 200 EMA and SMA on the daily. So it's really today's one of them kind of days. IWM. Amazon's a double bottom. Amazon's a double bottom. Snake breakout pullback, double bottom. So here's your snake. Wedge. Your wedge is your pattern. Breaks out. Pulls back, double bottom. PLTR is at 124. I called this out. We got a head and shoulders. Right shoulder touch, boom. Everything's at a solid support. Google, God. Was off the 200. SNXX, Rundy. I had SanDisk was it? No, I don't know if it was SanDisk. It was Seagate, I know. SNDK. God, man, I'll tell you what, SanDisk. SanDisk. SanDisk looking real good. Damn it. This is acting weird. Oh. Uh-oh. I'm going to have to boot bug. Who is that? Oh. That's Big C? How dare you? How dare you? Did I close my live stream? Oh, yeah. Yeah, I did. Why'd I do that? Come on. I'm back. I'm sitting here explaining all these support levels, and I don't have my screen up. I got what? No. I think Jimmy lost on. No, I didn't lose on Tesla. Nope. Is somebody still in Tesla? Somebody in Tesla? Jake Paul is? Okay. Okay. Oh man, look here. Look at that. This thing is acting so freaking weird today. Damn your accountant, you've done too much. $104 to $117. I got out at 104. I mean, I averaged 104 to 117. So, I mean, Tesla's setting up again. So the 305s, the 305, I don't know, kind of don't want to push it. I'm going to wait until Powell comes out. I think it's going to be a great play here at the bottom. Not Powell, but whatever the new guy is. I can't listen to these guys on Wall Street because I think they're all wrong. They've been pumping hikes, and I don't make any sense to me. It's almost like they're using Trump drain syndrome. Especially when we're at so close to these support levels. They just don't make no sense. Unless we're really trying to burn this market. Okay, we got a snake on /ES. See if we're gonna get a reversal. Snake on /ES. so tough. I gotta get a new mouse. We're just all about it. I had the same shit happen to me before. IWM. Tesla's at 133. So I got IWM. It's at the 63 to break. We got all of them. Well, Tesla's at 118. Double bottom Tesla. Tesla double bottom. Tesla double bottom. The 305s, I'm doing it. Although, like I said before, I'm fighting the fat cats here. I got the 305. Oh, look at there. Come on, well, you bitch. Come on. Wow, that's a weird mouse. My eyes have seen the coming of the terrible swift sword. Put a tight stop in this baby with a reward. Da 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 da. Truth is marching on. Glory, glory, hallelujah. TIGHST. Ah, you dog. Now, this is really getting bad. my mouse. And I was fucking. Breakout. He's back. My name is Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about cheap trades, moving averages, and being in the now. This is my life when it comes to family. We're at 123. Well, my family, they're all half nuts. One isn't a Tifa member that wants to run for an office seat. My other one was a drug addict. He's going to court today. They all smoke cigarettes. I really can't stand it. I'm always bringing an extra pair of clothes when I'm seeing Mama. I got one that's a truck driver. He got an ego that won't stop. I mean, he's got an ego. He said he asked for money from me 20 years ago, and that was under Obama. I had a lot of drama. Money comes and goes. Stick that up your hose, up your nose. Or talk about me like I got my GED. We all can change. I know it sounds a little bit strange. That was 140. Livy Goose, you love my singing? Magnificent hates it. I think we ought to give Magnificent a call. 'Cause Washboardjim is having a ball. I called his trade out at 115 and just sold it at 140. That's the Tesla trade. 2 days in a row. Magnificent, I got a great voice, but you have a choice. I'm very disappointed in you, my man. I thought you were my biggest fan. Oh, I'm sweet to the touch. Last girl I kissed kissed her so much. It's hard to get these chicks these days. It's either they want your money or your car keys. I'd rather walk in a maze. They want your house. They want your checking account. If I find one worth keeping. Whoa. Okay. Whoa. No. You can't do that. Last time my guitar fell, it broke a tuner. Okay, get ready again. We're coming to support. Are you still there, Rockstone? Oh, next leg down here? How dare you? You don't see the head and shoulders out of the snake? To a double bottom? Would you be upset if I bought the trade, Bug? Because I just might do it. I know two left with my great singing. Linzoid loves my singing. She wants me to go over to her house and do a house concert. She wants me to sing her a lullaby. Look at there. Brandy. I'm going to ask Magnificent, did you get my question? Look at that. 106, 108 to 118, $100 bill. You bought 10 of them. Oh, what's this here? I've seen something that was dumb. The universe. $125 for Tesla. $126. $127. So, time to poop and learn. Marvell almost sold Spider-Man. In the 1990s, Marvell was struggling and tried to sell film rights to several characters. One studio agreed to buy only Spider-Man and pass on the rest, saying no one cared about the heroes. That mistake led to Marvel creating its own film Universal. Years later, with characters like Iron Man, Thor, and building a multi-billion-dollar franchise. Marvel almost sold Spider-Man. 1990. Now this one's going to get you all. Who likes chewing bubble gum? We're now at 125 from 107, 108. We're up $200. Barcodes were that's on Tesla. Barcodes were first used on gum. The first product to ever scan with a barcode was a pack of chewing gum in 1974. This simple invention changed the way stores tracked inventory and checked out purchases. Today, barcodes are on almost everything you buy. And it all started with a stick of bubblegum in Ohio. Barcodes were first used on gum. We're at 130 from 108. Time to take some profit. We're at a trend line. Now this could be a possibility of an ascending triangle, more of a rising wedge. We've got all these wicks. So that's going to be resistance right there. 303.14, you got it? So there's another successful trade. Go to that body. You see how uneven these wicks are? You can't find a real good solid resistance. But if you use the body, you got a tweezer top. $303.15. And then you got this trend line down here. So pull it right down. I want anybody that's new to trading, jot down the 100 EMA, the 200 EMA, and the 200 SMA, and start looking at your stocks and see if any of them are hit on the daily and weekly. Oh wow, that's a triple bottom too. Go to 15 minutes. God, I'm gonna get rid of this shit. I'm charting off the wrong chart to begin with. It's a VWAP chart. Tesla's way under support on the daily. Oh, we got a double bottom on the yearly. Oh, this is good. This is real good. Double bottom on the yearly, Tesla. That's another setup. I see things that other people don't see. I didn't know that earlier. I'd have probably went heavier. I'm gonna go pee real fast. Nancy, get out of the bathroom. Well, look at that. I'm loving this here thing. I gotta go pee. Tesla double bottom, man. I'm loving it. Oh shit, really? Oh, that's good news. Yum yum. Kathy Wood. Kathy Wood just bought $25 million worth of Tesla and SpaceX. I mean, I'm telling you, this is a good spot. She knew it. Should I go in 100 grand? Should I go in 100 grand? We're at 135. 108. Yes!
My name is Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and not being a homosexual.
No, I'm buying. I'm buying. I'm at 108. It's at 148 now. $150. I'm gonna hold on to it. Well, I can't really hold on to it because it's today. So let me see. I'm gonna go down the road here and sell these. So let's go. August 21st. $300 strike is at $16.75. So 310 at 11. Damn, it's already going up. I'm finding too many. We're at too many supports right now. Definitely going to be a do or die. So where's it? Magnificent Seven. I gotta go pee. I still ain't got in there and gone pee. I'm excited. Tesla can drop to 282.75. I mean, we got a double bottom on the year, but it can drop to 282.75. So, wouldn't hurt to put an alert right above the 200 on the weekly. Type in weekly. I don't want to listen to her today. SPY, SPX, double bottoms. Everything's at a double bottom now on the indices. We got a new low on AMD. We got a snake breakout pulled back on NVIDIA. Apple, the 200, and we got Meta. Now, dadgummit, I said I wanted to call that Meta out. I didn't keep an eye on Meta earnings tonight. I would have took that trade. I would have took that trade and run it to the top. At least right there. So I got pee. I'll be right back. I can't listen to Schwab anymore. They're just not like they used to be, and CNBC's hard to chew on, but it's weird how I flip back and forth on these channels. Let's see if my income tax checks have gone through. I mean, my taxes. Nobody volunteered to pay my taxes last quarter. Oh, something went through. Probably my... And yep, one of them came in. Unemployment tax check went through. How come I was charged twice on this fucker? I was charged 3 different times. What is going on here? No, that's kind of funny. No, let me see here. I got 3 purchases on the same day for $3.53. That don't make no sense. Debit card from Price Cutter. We're taking an extra long lunch break. 4. I keep every receipt I have because I don't see how I could have bought 3 things on the same day for the same price. Getting close. Springfield Supply, I need to put that on another receipt. 721 price cutter. So it could be this. There's one of them. That's one. That's it. Huh. I'm going to go down to the bank. Or I'll go up to price cutter, one or the other. There's those lows. Something too. I need to. Credit correction. Oh, okay, I got it. Duh. Never mind. Wow. Okay, I freaked out over nothing. Damn it, Jim, you just put them back in there? Fucking idiot. There we go. I'm an accountant. $78, okay. Ta-da! Okay, back to work. PLTR is green today. Now, Netflix. Now, Wendy, nice run. Now it's a nice setup. We had earnings. I think we had earnings on it this week. And there's that 3 black crows with a reversal, white soldiers. There we are off the 200. Now it's the 200 is resistance. We got a head and shoulders right around 122, 125, 124. I'm tired. I have the room on mute. Sure. It's not on? Yeah, we had earnings on it this week. It's on. There's that 3 black crows. Oh, the room. Reversal, white soldiers. Can the room hear me? There we are off the 200. Now it's 10-4. I'm on. Everybody can hear me. Check your buttons. Loud and clear. So we didn't break the 63. That's, you don't want to take this trade until it breaks the 63. One of Cheryl's kids, I think, got bit by a rattlesnake. Jerry's? Cheryl. He was trying to kill it by the swimming pool in Alabama. It's only about 18 inches long and only one fang entered his arm. Manoa is his name. Got a friend of mine got bit by friends. She's a student thingamajigger. Got bit by a rattlesnake in Alabama. I remember when I was about 8 years old, we had a farm in Republic, and I was screaming, "Dad, snake!" A big old 8-foot rattlesnake, 6-foot rattlesnake, and it was right by the burn barrel. So you know where he went. And that was just out of town. We got chiggers, we got ticks, we got rattlesnakes, we got bear, possum, coon, black bear, some wildcats, mountain lions. No, I've heard what they call them, not mountain lions. But, yeah. So put a prayer in for the kid. Oh, man. I'm going to have a headache, all this praying I'm doing. Where'd Bug go? Wasn't Bug in here earlier? Or was that Johnny? I get you two fucking mixed up. No, Bug was in here. Where'd you go, Bug? Now it's about to hit the second deviation. Amazon. Joby's down 55 cents. Amazon's got a SPY. SPY got a double bottom. Fuck. Tesla another leg down. He's on the road. He usually says goodbye. Tesla's at 11. The 11.10's at $11 now. Target almost hit 732. Do you remember what we were looking at this morning? Wow, we went below my support big time. 732. Oh, GME. Is it under 20? Oh man, that'd have been a good trade. There's 1095. AMC, and we got Verizon. Can you hear me now? Marvell's down $10. Didn't this one have a run yesterday? Yep. We got a triple bottom on Marvell. I'm a Yankee Doodle dandy, Yankee Doodle do or die. Magnificent doesn't love my singing. I think everybody should ask him why. And for that, we'll have another song. Prepare ye in the name of the Lord. Nancy, it's time to get out of the bathroom.
Nancy plays a game. Everyone loses but her. Nancy doesn't care. Nancy only wants more.
Oh, Nancy.
She doesn't even see you. Jim's gonna shit on your face. Retail
Trader's gonna sit on your face too, just for being you. Just for being you.
Little people
I'm getting goosebumps.
but she can't hear
Anymore.
so high, it's all a blur. The pain below. Does she even know the damage done, or does she sleep so sound? Never a frown. Jim's gonna shit on your face. Retail
Trader's gonna sit on your face too, just for being you. We got Meta tonight. Trader's gonna sit on your face too. More cowbell, please. That song I wrote, or was wrote for Nancy Pelosi, my ice cream dealer. Well, they're talking about Microsoft. These guys will buy that crap. Let's give him some voice.
What are they spending all this money for? What?
Oh,
what I
God.
can see, actually, I feel like all of these frontier models will ultimately be commoditized, right? Like that's going to happen, right? And so I promise you, if OpenAI was a public company last week, it would have been down 40% off that Kimmy news.
I think the question you asked, like the for what, like
For what?
those two
Yeah.
words
These
are
people,
probably the most important.
it's
words.
unbelievable how they flipped the switch.
For what? Why are you going to spend, if you're Microsoft, $190 billion for the year? Why, if you are Meta, are you going to maybe hit...
God. I think I'm dealing with a bunch of morons. I turned voice on for about a minute. I can't stand it. This is one of the most deliberatest bull craps I've ever heard in my life. I want to know who's paying them off. Burry? AI is going to be the best thing in the world, they say. Let's pump these stocks up thousands of %. And all of a sudden now, I got one example, and there's probably 100,000 examples how AI is going to help. This is one example. The IRS. These people sit there and type letters all day long. They're using AI to make their job easier. They're a lot happier. That's just one example. I know a guy that's using AI for a trading bot. He doesn't have to do nothing. I just don't know how to deal with it. I think I'm losing my brain, man. This has been going on for two years of these people. If it ain't one thing, it's another. Anything they can find. I heard a guy this morning, he's got good guidance because he's calling some of that tariff money that he's going to get, that he took from him. he's going to throw it back in the company. So he's using that as a good guidance into 2027. I don't know how much it was, probably not much. I don't even know what he was working for. Now see, they're starting on Meta.
Sense, doesn't it?
Yeah, it's like what the VIX used to do for the market, right? Here's the VIX and, you know, volatility and
snug face these people have.
CBS is also, there's a huge hedging aspect, which we have to all, like, that's complicated. I do think what Meta does.
Now, I'm going to get this bitch back on here when she's wrong. She's acting like she knows everything right now. Do you think they're going to bring her back on a couple weeks later? Were you wrong or what? Oh, well. It's all right. I'll make a killing. They can keep on. We got out of those suckers. Some of these guys have been around for a long time. They should know better and talk like this. This guy here, I always like this guy's trading.
Executive here now. He's going to lead our attempt to lease out our compute. We potentially have a relationship with Anthropic. They're going to try their best.
They can try and steer it away from the CapEx as much as they want. Every analyst question is going to be about the CapEx.
Yeah.
Yeah, can I take a second on the
CapEx.
valuation? Like, do not get, you know I don't like PEs, but do not.
If the government was throwing all this money into it, they'd be doing jumping jacks. They did that under Biden. 10 billion here, 6 billion here, 5 billion here, 3 billion here, 100 million here. They was it 300 million up in Canada for buses and they never got built? Or that 32 million that they arrested some chick this morning that stole all that money and went over to Jamaica back during COVID. They just got her today. Throwing at 32 million. Fled to Jamaica. I didn't get to see her. Now in Florida. $32 million fled to Jamaica, now in Florida. Fugitive. She was the fourth most wanted fugitive. And yes, she's black. Do or die? There's your 732. Tesla.
Descents, we'll see. Forward guidance, does it totally go away? Comms by the Fed, task force, more on that. Goldman today says we're set up for the biggest Fed day surprise since 97, whatever they do, right? Because usually if there's going to be a move up or down, the market has so anticipated it that you're not at 30%. And now if they don't make a move, well, how could you be at 30% and they're not going to make a move? How do we see what happens this afternoon is impacting this market?
I think there's a very low probability, obviously, they raise rates. His first meeting. I think, we have to give
They're not gonna raise them.
some rope. He's in the
Well,
new
makes
position.
sense.
He's obviously a veteran. And I think, you can give no guidance, but you have to, build out your case. And so I just think it's going to be
These
interesting
fucking
that all of
options
us
are
are
so
going to be
high.
listening. There's low probability of a rate hike. And also, if you think
7,400s.
through the inflationary pressures, there's really nothing.
They got these jacked up so high. 7,400s are way out of the money. They got 22,000 contracts for 920. What we got? How much more time we got? An hour and a half. Oh, we got what? Is it 1 o'clock Eastern? There's a knife. I mean, not a knife, but a boom. 920 to 970. We got to break the 9. Come on, baby. Let's do it. Okay, we broke the 9 and we crossed. Come on. Don't drop. Oh, fuck, I'm looking at the wrong chart. Help me, Lord. Oh, yeah. Look at that. I was looking at the wrong chart. This one looks better. Says all you need to know if you had your head in the sand and didn't already know. Senator Bernie Monroe asked Dr. Fauci to turn and look at roll of people that attendants that were prosecuted for refusing to toe the line. Oh yeah, and the mass social distancing. He refused to turn and acknowledge them. Wow. I was pissed. You know what it's like working with them mask on? Breathing in that crap? Breathing your own bad breath with little oxygen. I swear to God, he's trying to kill us all. It sucked. We're at 11:20. I'm up $200 a contract on SPX. Big C, you get in it? Let's break the 63. You're at resistance. Mr. moving up a little bit. Yesterday I took SPX from $380 to $20. I'm about ready to take this one to 3,300. Once whatever his name comes out and fools all these idiots that thought we were going, well, if I get a rate hike, I'm the idiot. Okay? We'll know my true destiny here in a little bit. I'll be totally confused probably quit trading. I can't listen to these people here because they just put me up in a frenzy. I was sitting at the table right now, I'd be telling them Goldman Sachs is way overbought. Google's holding up well. We're at $12. I want 32. I want 30.
Neutral to bearish call vertical here. I went out to the July 31st weekly option, so just about 3 days to expiration on this one, or 2 days. Sell the 415 strike call, that's $20 out of the money, and then buy the 420 call. So just a $5 wide short neutral to bearish call.
They were relentless good.
Collecting roughly about $1.50.
I told the IRS this morning, I said, why don't you audit Fauci and see where he got all them millions of dollars back during COVID? How much money did he make, Fauci, during COVID?
Where, hey,
He made a bundle of money. And the guy says, I doubt that. And I said, you weren't paying attention. He made like 9 million. Fauci's and wife net worth exceeded 11 million during COVID. Fauci earned 3.5 million in his first year of retirement in 2023. 3.5 million. He made a ton of money off COVID.
I'm Sam, New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy.
1270 on my 1280. I want $30.
Network at schwabnetwork.com.
I'll take 20. Anybody take, well, I don't know. We're at the 100 now, and we're above the 9. Retesting the 63. What a miss. See, I don't let things like that bother me. I'd rather miss it than get stuck in it and get screwed. Rockstone Trades, are you okay? Make sure you hit the like and subscribe. I got a lot of good little learning videos. Let's break the 100 here. This is the 100 EMA. This is the VWAP. So our target is the 200 SMA. And that's right around the VWAP. So we want this to hold to 9 and just kind of shoot on up. I don't see it tanking anymore, but I don't know. These guys think we're going to get a rate hike. I don't think it should be done the first time out. I think we'll get some water, or some. I'll get me some cider. Make me some cider tea. I'll be right back. I'm gonna try this glass cleaner on my glasses. See, I used to be a big liberal. Now I'm a conservative. My sister's a big liberal. She's running for some kind of office. I just think it's funny. I emailed her and I said, "You want me to help you?" Yeah. I'd say, do you support Antifa? Nope, prison guy's up.
What they're expecting to spend this year, and you know, investors.
1170.
Investors see that as an expense, as a compared to an investment. You know, they're showing that this is turning into real returns with the the return on ad spend increases through the AI infrastructure plays. Plus now they're able to sell some of that compute. We'll see if the deals go through, but they've got Anthropic's talking about buying $10 billion worth of compute from them. So that's always an option. It's an asset.
Was it HIMX that took the beating?
Make their
that they're all whining about today.
Advertisers do better, so they'll spend more, or maybe they can sell some of that compute.
So
I don't see a big problem with it, especially when they're making as much money as they're making. I think last quarter, when you take away the one-time tax charge, they made $19 billion, and so we're talking about spending more than they're making in a year, but they're still doing just fine. They've got a little cushion there, and it's starting to definitely pay some dividends as far as that investment goes. So I think a lot of those fears are overblown, and if they raised it slightly, it wouldn't spook me as an investor. I just want to see that all of the folio data is true, that all of the the demand from the client side is up, and the demand from the advertiser side is up as well. That's what we've got showing. So this is a healthy company at a discounted price, in my opinion.
Landon, the Likefolio data is overwhelmingly positive. And this is a company that, who knew that Instagram could become what it's become? We all knew that Facebook was popular. We didn't know it'd be this popular, but we knew it was popular. It was Instagram. We always had doubts about their ability to monetize Instagram. Now they've clearly done that. And Instagram is becoming its own force in social media. Now it gets to this next moment. I was reading this morning about when Amazon came out with AWS. It was 2006. And
Yeah,
some of
Tweezer
the
bought 'em.
news releases that we're seeing from Meta feels like we may be having like a Amazon AWS moment for Meta, with them actually getting in that business and creating another business. We know they're dominated by advertising, and advertising is going to pay all their bills.
So Meta comes out with excellent earnings. They've been beating it down. CNBC, CapEx. Meta has how many billions of dollars in cash? It's like how they beat down on Elon because he spent some money. And then he became a $1 trillion man for a bit. Meta, cash in hand. I mean, I don't know if I can trade 81 billion in cash. And they're crying about a few billion in CapEx. Meta, how much do they have in CapEx? Let me find out for sure. They got 81 billion of cash. And they were all doing jumping jacks when it hit 20 billion. Now they got 80 billion. What are they going to do when it gets 160 billion? Go stick their head in the sand and try to crash Meta? Okay, Meta spent on CapEx. Meta expects to spend 125 billion. Falls CapEx spend of 72 billion. In 2025, this follows a CapEx spend of 72 billion. Oh. And 19 billion in the first quarter of 2026. Well, that is kind of scary. Big tech running out of money, is that what they're saying? Wow, that's a lot of money.
Sure. So those two things go into the earnings score. Earnings score is plus 32. So there's a significant difference between what consumers think and what
1240 in my call.
Consumers like it a lot more, and everything that we're doing is pointing upwards. It's not like crazy all in, buy out of the money calls, but it's definitely a solid signal at plus 32. So we're bullish heading into this.
Okay.
Bullish on what?
All right, thank you, Landon. That's Landon Swan, co-founder of Likefolio, with the latest sentiment data
Bullish on Meta
platforms. Now, for the trading perspective, let's bring Tom back into the fold. We got some insights from the Likefolio team, and their data looks bullish. Your final thoughts before you guys jump into the example trade, Tom?
Yeah, their data is all bullish because of the fact that the portion of their company that makes them money, search and advertising, is doing really well at this point. You can't argue against that, but there's some cracks here. You start looking at, the amount of money that they're putting into CapEx, right? In April, they just said that, hey, it's going to probably be $145 billion this year. Do they raise that? We all know they don't have a very good track record when they're making investments. Look at Reality Labs. They blew billions of dollars on the metaverse that came to nothing. And
yeah, I figured that would
they
happen.
Lost a lot of money. So maybe that's been scaring investors, and that's why you're seeing the stock price kind of diverge from their data at this point. But then also, you know, they're losing ground to OpenAI. They're losing ground to Anthropic at this point. So that's part of the problem I think that investors are having where, hey, the corporate side of their business is still doing really well, but they're spending a lot of money. Their free cash flow is supposed to go down to $1 billion this year, I believe. That was $45 billion free cash flow in 2025, and it's supposed to turn negative in 2027. So there's cracks here, and I think that's why the stock diversion has been taking place from what maybe their data has. But Kevin, you look at this one, the stock's off about 25% from its all-time highs that we hit just about a year ago. How do you want to look at this one from an example trade?
Yeah, that's pretty easy math, right, Tom? You look at just about 800 to just about 600, and there's 25% of the company gone in terms of the market cap. Now, the expected move, right around $45, Tom. The expected move for the week, about 47. So I looked at something, I rounded it to about $50, and I looked at something in the calendar spread family. Now, the nice thing about the calendar spread is you can give yourself upside exposure without a big capital outlay. And so what I looked at, Tom, is taking that $50 expected move. I did the 1 week wide, August 7th, July 31st, 640 call calendar. And Tom, that's trading $2.70. So for a modest amount of debit, it's still risk. You know, there's still risk. Anything you buy is at risk if the stock were to go down. But for $270, Tom, you can get exposure to the upside in Meta Platforms that could be a pretty substantial winner if it were to go towards $640, Tom. And the last thing, the 200-day moving average right now on the Thinkorswim platform, $636.
Yep, good point there, Kevin, on the technical
I'll be right
side of
back.
this. And then also you
I'm
look
gonna
at
walk away for
what
a
the
second.
option market's pricing in at this point, which is plus or minus $46 in either direction on a one-day move on the platform. And what does that equate to? About $45 plus where it's trading about $590. It's just near or about that 200-day moving average also. So this sets up with about a 1 standard deviation move to the upside if you think the stock is going to rally. Kevin mentioned, you know, you're shooting for 640, but you got a nice wide range between probably 600 and 690 that you're going to be potentially profitable on this one. But let's break it down. August 7th weekly options expires in 9 days. Buy that 640 call, sell that 640 call in the July 31st weekly options. 1 week wide bullish call calendar here. You're paying roughly $270 debit. There's your risk, as Kevin mentioned, $270 per spread with a nice wide range for this stock to trade in. What you don't want to happen is the stock to go lower or the stock to go up maybe $100 or 2 standard deviations to the upside. That's when you'll start getting some losses on the upside. But you've got a nice wide range, taking advantage of that vol dispersion we talk about where you're buying a lower vol than what you're selling because of that event risk that's built into this one. And this sets up about with that 1 standard deviation, Diane. It sets up with like Folio's data. If you think this thing is going higher, about that $45, $50 from current levels, this is a nice risk reward on this type of position.
All right, so let's balance. We've got the breakdown coming up. It's not just about the AI heavyweights today. Qualcomm also steps into the earnings spotlight. Can AI help improve it's more than just a smartphone company? George Sillis joins us to help break down what investors will be watching for. We've got more Fast Market after this break.
Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Hi, I'm Alex.
I'm Jean. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall, live on the floor of the big board. Before we get to the breakdown, let me give you a check of where markets stand as we get closer to the bottom of the lunch hour on Wall Street. We've still got pressure across the board. The broadest benchmark of U.S. stocks, the S&P 500, is still lower. We're lower by almost 1% there. The Dow is off by more than 1.5%. NASDAQ 100, similar to the top of the hour, we're down 1.4%. Russell 2000 lower by more than 1.5%. On the earnings front, it's not just about the hyperscalers. Qualcomm also reporting its quarterly results after the close today, with investors looking for more proof that its AI strategy can drive growth beyond smartphones. Wall Street looking for earnings of $2.22 a share. Investors will be looking at handset demand along with any updates on AI chips after Qualcomm recently announced Meta plans to use its upcoming Dragonfly AI processors. Time now for the breakdown. For that, let's welcome in George Silla, senior markets correspondent, to do a deep dive on Qualcomm. Has kind of an AI test in front of it today, George. So walk us through what expectations look like.
Well, this is kind of interesting in the sense that, Qualcomm is certainly not necessarily pivoting their business overall, but they are expanding their business to, the AI data center race. And this was a revelation they made last quarter. Stock actually went up alongside a lot of the other names post the late March contraction we saw in the markets and the huge run up from March to basically June. But since then, the stock has been down quite a bit. I mean, it was trading around $250 just about a month ago. But nonetheless, it's still higher year to date, but it's still not performing all that well. And the reason being is that their core handset business has been a challenge, and that's effectively what they reported last quarter, with their handset business in China, in fact, down about 13% year over year. The other aspect of Qualcomm's business is that they are losing the modem business that they used to sell to Apple. Apple's basically going to be replacing, and they're slowly doing that, Qualcomm's technology in lieu of their own.
Oh, 13:30. I'm going to go outside again.
Business for handsets, but the primary driver going forward, and this is why we saw the big run up in the shares earlier this year, is what are they doing to develop the AI data center CPU markets? And that's what I think analysts and everyone who's invested in this is going to be looking for.
George,
in their report. If you look at the numbers
shut up and
they're
listen.
going to report.
Well, I'm up $400 on one call I paid for $9.20. Well, it's about to hit the 200. That's what I'm waiting for. It's 13.20 cents. It's called the Sneaky Snake. I love to catch the knives. It seems like I've lived those cat 9 lives. I see the 200 SMA in my sights. I think it'll get there once the Fed gets it right. $70.70 63. It's at 14. I'm up $500. I want 20. Let's wait and see. It's 70, 73. 63 is my target. We sat back and listened to Jim talk about pooping and learning. It's at 1440. I'm up $520. Round and around, round and around. I want 20. Give me plenty money. Woo! Trump said to buy. Or was that AI? Trump said to buy. Or was that AI? I've played in many of bands all over this land. Wrote a few songs, yes I have. I dated these girls, they took me for a whirl. All they wanted was my talent, not my love. Here's a band I used to play with. Let me see. We're gonna play it. This is a song that I love. Where are we on this thing? I want 1420. I can get out right now, but I want to just see here.
At IHG Hotels and Resorts, you can explore the neighborhood or live like a local. Unplug for the day.
1470, keep going.
With IHG's 21 hotels,
I want 20.
You can guess
I want it now.
1560. If I was a snake, dead and gone, dead and gone, dead and gone. Hit 15, baby. There it is. I want 20. Come on, Fed. Give it to me. Gentle, dead and gone, treat me cool, dead and gone. Jeff and Beta Band out of New Orleans. I got receipts. Oh, damn. Stop it. You're killing me. 1540. Whew. Ejected. There it is. We hit the 200. We hit the 200. What a miss. Where in the fuck's my man? Sneaky snake, no pop. Did it go? Keep me cold. We're at $15 and $16. I'm up $700 at one contract. Should I sell it? Yes or no? Should I sell it? I say no. Now we got a double top. Now we got a double top. For names, Washboardjim. Come on. Come on, panic attack. You sold your calls. You make me feel so bad, Big C. Very bad man. Very bad man. Okay, I'm going to show my receipts. is. Washboardjim, Jeff, Vita, and David. David was getting off on my washboard plan. Although I've never played with a washboard before. Where are we now? This is with me with a very famous band called the Shiners. The guy back here is the founder of Guar. He plays with Drive-By Truckers. This is me at Chicks Beach, amplified to a bunch of speakers. That's when I was in my prime. And there's me as a soggy bottom boy. There's me jamming with Split Lip Rayfield. And where's my price of my stock at? We're at 18.20. Unbelievable. I'm gonna get $1,000 on this. Should I sell it? Or are we gonna go to $30? Huh? Speak up. Me and this girl used to go around touring around. Lori Joe. House concert. I'm probably going to sell this thing. I really think we can go higher. We are at my resistance. Final resistance, $18. 30. 1850. 1850, I took a little trip down to Colonel Jackson on the mighty Mississippi. I loaded up my cannabis and I took my boat for a ride. I had $19. I think it's time to go ahead and get out of this trade. I did 100%. 100%. $19. Okay. $19. $17.80. I've got to hold the 9 or I'm going to get out because it'll be a pretty good drop in my profit if I don't. Got to hold the 9. The 9 keeps me in the trade. This is a good lesson to learn right now. See how it respects the 9 all the way up? Then you have the lower lows and we come back and hit the 9. So this, to stay bullish, you have to hold this. If that's going to be your stop. just right below it. You could have a fake out, or you could just have a freaking knife. So as long as we're above the 9, I stay in the trade. One glimpse of going under it, I'm out. I don't even want to wait for a body candle. And I can't get up and go get my, oh, I didn't get my water going anyway. As long as I'm above the 9. Well, I was just looking at Tesla here. Oh, better wait. We're going to know any second here. See, as that body of that candle started getting small, did you see it kind of squeeze down there? When it came down, now look at that. It's up $200 in that candle right there. $260. I'm going to get 2,000. Double top. There's your exit. Is anybody in this trade? Probably not. Too much. Now's the time you want to think about it. Profit. That's a $1,000 trade. Profit. There it is, 1920. $1,000. It's yours, 1940. Yay. Big boys. Wear your big boy britches. I hate to say it. Is he going to break out or I can get out of it? I think there's only one thing to do. Uh-oh. Uh-oh. There it is. Hello? Hello, this is Marie Osmond. How may I help you? Yes, Marie, are you going to be in Branson here in about another 45 minutes? Yeah, I was in the SPX, and I know you're watching on YouTube. Did you sell your contracts? $2,000, baby. We had a hit record. Oh, yeah, I was in it. And I sold them for $19.99. Well, you idiot. You know it's at $20.90 right now, $21.10, and I want $3,000. Yeah, I've been waiting for the Fed to speak. I knew this knife was going to happen because of all the lies we've been told about interest rate hikes, how bad everything is, and how much Donald Trump sucks for 2 years straight. And it's about to drive me batty. I know we were both baptized Mormons, and I just wanted to let you know that I still love you, Marie. How many kids did you have? 11? 15? Oh. How many of them are mine? 2180, 2190. I was about ready to sell it. Sergeant, can I ask you a question? Did you serve in the service? Sergeant, you got your mic on too. But I can't hear you. Or can I? No, it just spelled that way. You got your mic on, buddy. There you go. That doesn't mean you can't hear me. You can still hear me. If you're on a desktop and it don't have a mic, go down, you take off, well, do what you're doing and I'll mute you. Turn it back on. Can you hear me? I'm using the EMA. The SMA is a slower moving average. You can get back on here. Let me mute you. There you go. Can you hear me? No, you muted yourself again. Come on, man. Wow, 2340. I'm loving this. Oh yeah. Man, that was great. That's just beautiful. So I don't even want to listen to these idiots on here. Did we get the rate hike or not? Trump bans Chinese humanoid robots. Oh, Sergeant got it right. Good job, sir. You get a medal. Oh, small loss. An EMA is a faster moving average. SMAs are slower moving averages. I have the SMAs on my chart because, like, when we have knives or something like this, I can usually catch it off the 200 or the 50 SMA. And I use the EMAs as also as support and resistance levels, but for scalping. But if you were using the 200 and the 50 SMA on the daily and the weekly and the 1 hour and catch and bounce off that, you could probably have a swing trade. I'm going to show one of my paintings here. This is a painting I did. Golly, fuck. I'm gonna get it. I really truly believe I'm gonna get my 3 frickin' grand. This is the first time I've ever held so long. Not the first time, but I mean, I'm getting good at it. I'm getting better at it. Does anybody see the pattern? So we had a triple bottom here to the 63. Snake, breakout, pull back, boom, inverse head and shoulders. To this pivot point, to the yin yang. Come on, man, let's do it. Let's get 4,000.
this time period, now breaking up through the 250, breaking up through the 302 resistance level, again back up into those mid 400s, and giving perhaps a more well-defined, if you will, head and shoulders type of reversal pattern here. In fact, breaking the neckline of that pattern at the 302. So if you're going to look at where the price target is, just that measured move on this pattern,
neckline
down around that 165, which
that's
was
a neckline.
level of resistance below.
That's a neckline.
It has
that's a
been
good
level of
spot.
support as well.
What is
So
this?
if this goes to that
LRCX. LRCX.
Relatively quick pattern. We could see this happen on this catalyst and see the continuation on the catalyst of the earnings announcement. But it does have a fairly solid level of support here at 250, where it's sitting. It's sitting at 257 right now, just above that level. But that's been tested once, twice, 3 times here as a resistance. You look at where momentum is, and momentum is still falling off, but it is not at an extreme, which you can look at it from this perspective. Well, it's not down in that oversold range, but on the other side of that coin, it's not at an extreme yet, so there could be more downward pressure here if it does break through this 250 area, Jenny.
Okay, and a good point. And actually making a very similar move today to, of course, the move we just discussed in ARMS, down about 4.3%, a bit better on the session, but everything is waiting on the Fed, it seems like, at this point. So we will continue to watch how overall markets perform. So appreciate it, Ben Watson, for always bringing the technical setup on our show every single day. And so now, last but not least, when we assess trading land research here for example purposes, unfortunately, I'm tying them very heavily to like
You reported, Jim?
KLA and NASML, but obviously we could see it totally different.
Shame on you.
Get the earnings.
Yeah, and generally, these names that are kind of earlier in the supply chain aren't as volatile. Now, this is not the typical time.
Shame on you.
Very similar idea to what we looked at in
No soup to
ARMS.
you.
In this case, using the 200-day moving average as a support line potentially, and just sticking the spread below that. So it's 240, 235, July 31st, looking for $1.25. So a little bit more aggressive just based off that risk reward. It's 3-1 in this case. And so you risk 375, a chance to make 125, break even would be 238.
You better be nice.
So it's a neutral
Big C.
bullish strategy. It's a risk-defined strategy, most importantly, Jenny. And I think that's the part that we should highlight when we're talking about these trades at the moment. It's not, pretending to know what's going to happen or setting up something that's going to, make a tremendous amount of money if one thing or another happens, but trying to set up a probabilistic outcome.
I'll stick the sergeant on you and kick your ass.
Scenarios it can be profitable in some way, but also most importantly protects from that catastrophic move. And in some cases you look at these and you say, oh, the stock's lost 40-50% of its value already. How much lower can it go? Well, it turns out a lot lower, as some of these earnings have shown. So one way to protect against those sort of multi-standard deviation moves, whether it's a bearish strategy or a bullish strategy, is to use a risk-defined option strategy if that makes sense for a portfolio, and that's what these do. So whether this stock goes through our our shorts or our long strike by a penny or $100, the theoretical max loss is the same.
Yeah, I think that's so important to point out, because as we look at these names, and obviously a lot of them having their worst months on record or their worst months in, at this point, like 30 plus years, as you did rightfully point out, you can still lose, in like Lam Research, for example, $256. And so obviously something to be mindful of when we assess your risk as we approach these typically historically high volume, high volatility type events that earnings have become for all of the, entire economy, but also more specifically these AI names. But we will leave it there for our Chartmaster segment today. Now, coming up next, Meta reports earnings also after the close. Meta right now slightly, actually pretty much unchanged on the day, but investors are watching for signs that its massive AI investments and smart glasses push are really starting to become real growth drivers. So we'll preview the overall report and expectations up next.
See, it's got to stay above $2,000 here.
Earnings
Or I'll get out.
and hot takes that teach you about stocks and markets. Follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Have you ever watched an interview and thought, I wish they had 5 more minutes, or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Marley Caden, and our podcast is slowing things down.
Yep.
We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcasts.
Stay connected to what moves markets. Download the Schwab Network app.
I was treating my epilepsy with music.
Wherever you are.
Hey Bob. Hey Andrew. Last year, my
There it
dad
is.
had
I can't take it anymore.
to see this person
You
that
better
I
hold
see
right here.
force in our family be vulnerable.
Wait, had a stroke?
Yes. Now,
Quit making fun of your dad.
Daily, I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial.
I am not.
I probably met 20 years ago.
Jim's really
I've never
been
met
there
you in
to
my
answer
life.
questions I ever have, makes a huge difference.
He says I was his financial advisor. I'm here just for educational purposes.
Also grows around its smart glasses business, which has emerged as one of its biggest hardware and further AI bets. So joining us now is Matt Maher, founder of M7 Innovations. Matt, thank you so much for joining the show today. Always a really great conversation.
That's a real good answer.
So what should investors be paying
I like that.
attention to, say, beyond some of the headline
That's good.
numbers?
This guy's smart.
Well, Jenny and Alex, great to see you again.
I'm out of it. Big C, he's smarter than you are. Woo! We're at the 50 SMA. I know Pound Bell's here, but I don't care. I need a break. I'm going to walk around the building and bring my water. It's empty. So I'll be back.
You mentioned it's the CapEx spend being heavily scrutinized.
I didn't know it was that much money, CapEx, that Meta spent. I kind of don't like that either. You don't spend all the money you frickin' got. What's wrong with you? When I first started my business, I always tried to keep a reserve of $1,000. I mean, I had a picture frame shop before that, and as I was working my frame shop, I was dealing art, and 65-second attention span. So I always had to have some kind of reserve in case I wanted to buy a new piece of art, or because always something would pop up. I wish I missed a great opportunity with what's his name? That guy with the curly hair that paints. There we go, back up. Right off the 50 SMA. Did you see that? Double bottom off the 50 SMA. And it's off the 63. in the VWAP on the SPY. Who was that painter guy in the 70s, 80s? Oh, Magnificent finally showed up today? Bob Ross. Exactly. So I met Bob Ross, and I asked him if he'd come to my gallery, and he did. And I asked him if I could buy a painting of his, and he said it wasn't for sale. And I said, come on, man. I got a couple $100 here. I'm just a struggling old frame shop that needs a little bit of help. I would love to put one of your paintings in my window. And he said, well, instead of selling it to you, I'll display it for you. I said, well, that'd be great. But I had that reserved just in case I would have had that chance to get one.
Growth trajectory there. So I think if they can prove out that advertising is going to continue on the incline, just like Amazon did in 2005, they can start to carve out and subsidize all these other things that go beyond just the side quest that Mark Zuckerberg has had in the metaverse and NFTs. And I think they're actually going to have a real business here in spatial computing, which isn't getting a lot of attention right now, but that is going to be the next big innovation that comes after this tsunami of AI kind of washes over us.
Do you think
I wish I'd
there's
have
a
caught
chance
that before
the
that.
numbers for the core business can come in strong enough to kind of overshadow the other story?
Yeah.
Or is it just a market right now that is just so concerned around CapEx and free cash flow that it really doesn't matter?
It's a great question, Alex, and this is something I'm going to listen really close to. If they can talk about how their ads within Meta AI or their AI-generated ads, if they separate that out as a separate revenue stream, that's a huge bellwether of success. Because right now we have absolutely no benchmarks if advertising within AI or large language models is going to work. Google really doesn't release those numbers. OpenAI has said they're going to generate $100 billion in ad revenue by 2030. If you think GPT hallucinates, that's probably the biggest strategic hallucination I've ever heard. There is zero chance they can actually produce that. But Meta has the opportunity to pull that out and say, we have a new version of our advertising revenue from just artificial intelligence that is growing. And if they can do that, that actually opens up the growth story within advertising, which generally is a pretty
That's
flat
smart. I didn't think about
growth.
that.
They can only get market share. The overall spend doesn't grow, but it'll be real.
That's a smart idea.
Their artificial intelligence within their advertising.
Who is this
ecosystem
guy?
Because it is best in class.
Finally, someone
Okay,
smart.
so we've obviously seen, I mean, so many companies making some substantial, I mean, huge AI investments. Meta's obviously been one of those names. It's sort of hat in that ring. But how do they prove that these spending levels are now justified? Do you say, like, further, again, innovating their ad business?
Triple bottom?
This is the answer also advertising, I guess, is my question here.
That or we catch it down here at
I love the question, and I think
73.68.
it's tricky because right now.
Right now, you're at a support level. Pay close attention. For my name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy. 1870, I took a little trip. 1770, I took a little trip down the mighty Mississippi where things got hip. I took a triple bottom. I didn't know what to think. Then all of a sudden the stock began to crank. No, we're back at 1770. I didn't go get my water yet. I didn't take this trade. I'm just calling it out. Just guessing. I don't want to throw $1,700 in a trade. I got 301.60 for support. You mean it's now support? 302 is now support, not resistance. I'll be right back. Get some cider going and water.
Income. All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
That's the way I feel about Schwab sometimes.
Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network. Welcome back to Next Gen Investing. Now, the Fed announces its latest rate decision this afternoon, just in about 20 minutes from now, actually, with markets focused on Fed Chair Kevin Warsh's outlook for policy and any really changes, of course, to expect. But for more on the market's overall expectations, we are now joined by David Doyle, head of economics at Macquarie. So, David, what's the most important thing that investors should be watching today? And appreciate your time, of course, joining us about 20 minutes ahead of this decision.
Yeah, so I mean, look, normally when it comes to these meetings, or at least for the last several years, we've had a clear picture of what the decision would be in advance. But this morning and I guess early afternoon, it looks somewhat ambiguous. Like the market pricing, has hovered between 30 and 40% for most of the last few days in terms of the odds of a 25 basis point hike from the Fed. So we think the first thing to watch for is whether or not they do hike rates. Our view at Macquarie is that they'll stay on hold. There might be some signals in the statement that a hike could be on the horizon if the data evolve, as many people anticipate. But the other thing we'll be watching for, in addition to that, is to whether or not there's any dissents from folks looking for a hike at this meeting, and if there are dissents, how many there are, and for what reasons.
Okay, then, David, building on that, my big question coming in then, and I think you somewhat have answered this, but I want to get more thoughts on it. Given that landscape, that it seems like for the first time, certainly since pre-Janet Yellen, we truly have uncertainty in the decision. Like the odds reflect that, but I know we've come into some of these events maybe with 60-40 odds, but it's really felt closer to 90-10 on those days even too, as some of the articles and things leaned us one way or the other. Does it really feel like a weighted coin then? And as a result of that, does it mean that we're probably going to have a little bit more volatility in the market reactions around these events for the time being?
Yeah, I mean, I think so. I think, in recent years, there has been some ambiguity, maybe a day or two before.
So let's go over some watch list.
Typically what's occurred.
These guys are just talking shit. I don't care. So, YouTube, you ready? Yes or no? Just made 100%, 110% on an SPX call. That was real nice.
just made 100%, 110% on it.
Are we ready? All right, here we go. Which one you want to do? You want to do the earnings, this week's earnings, or the watch list? Let's just go through the earnings real fast. We'll do 4 or 5 of them. So this is how I have it. Okay. I'm gonna give a little lesson on watch list. Does everybody have a watch list? Is there anybody that does not have a watch list? Anybody that does not have a watch list, please say yes. I do not. Okay. Now, watch list. You want to start your watch list with at least 5 to 10 stocks. You don't want to be overwhelmed with your first watch list. Now, I divide them up in different sectors, different kind of strategies, like the cannabis sector, the EV car sector, the earnings. I also have them set up in different ways. Like if I wanted to watch a 0.001 to 50-cent penny stock, these are the ones I'm going to watch. And I'm going to pull up the high volume, and I'm going to look at the very first one, G-Sun. I'll look at the news to see if there's any news on it. I'll look at the volume, but I break them down in sectors. I also break them down in patterns. I break them down in price. So I have a lot of watch lists. Top 10 in the NASDAQ. Today's runners. These will only come out for today. Here's one up 100%. NCRA. And I'd want to read the news. Files for a potential 15 million share resale. So they're trying to, shares valued at 136. They take a stake, acquires a stake in a Taiwanese memory. Maybe a good time to be buying Chinese stocks, Taiwan stocks. They're going bankrupt. So I put them in sectors. And then I have them set up as in patterns. And Golden Cross. Look, I'm going to get anything. Hammer. Being kind of stubborn, aren't you? You should have a hammer. 9 EMA crossing the 21. Oh, shit. 3 in a row. There we go. Switch this over to the daily. Tiva. Tiva's at the 50 right now. There's your, you just crossed, we just crossed, the 9 just crossed the 21. We crossed the 21 right here too. I got this is a cloud. This is a 921 cloud. The bottom's at the 21. So it just couldn't break the 21 for days. Finally does, pulls back, starts to break it again. So today, Sophie is down 122. It looked like it had its earnings. I called this bottom support in the video. So let's go to the video here. Man, I'm trying to find a good lawnmower. I'm so confused on all these lawnmowers. I want to get a little pull behind push for the trailer, and then I want to get a big one for the big one. Support that I called out, that doesn't break the 200. Amazon, like I said, before, and raise it up just a little bit. I'm using the pick, but I use the bodies. I'd almost consider it a bullish pattern. Bottom's a chart pattern. The moving average will be the 63. We got a big watch list. Yeah. Let me get her off here so I wouldn't have to. I'll talk to her in a second. Say what? So our lowest support. Slippage. We got a big watch list. We got earnings. I mean, this earnings week is going to be real huge. $15.19 for the lowest possible support this week, and that'll stay bullish. $15.19. 63 EMA. I said it. I use chart patterns, moving averages, and being in the now. I use chart patterns, moving averages, and being in the now. And I said 15.19. So the triple bottom's a chart pattern. The moving average will be the 63 EMA to break on the weekly time frame. Yes, sir. Now I've been trading this stock in a channel right here. This is set up for an ascending triangle. This is called an ascending triangle. Well, no, it ain't either. It's a symmetrical flag. It could be an ascending triangle. It can be an ascending triangle because we got that wick. But I use the bodies. I'd almost consider a bullish pattern. That maybe this week we could break out of that 1886 area on that triple top. Maybe wrong. We got confirmation. So let's go ahead and put a resistance to break alert set here. Mark at or above, and I'm going to type resistance to break. This shows up on my message. And then support, no lower than that 15.19 area. And this will come up when my alert triggers. You heard it from the horse's mouth. 15.19. Pretty good call, I'd say. I'm sure it's pretty close. Earnings beat expectations. This is why Sophie's stock is dropping, even after its earnings beat expectations. Sophie left EPS view untouched. Earnings per share with a potential rate hike ahead. Oh, God.
Oh my. Potential. I'll be right back. Potential. JetBlue, Apple's up today. I didn't expect us to keep going, but we got a new high on Apple today. There's a double top. And I did the Fibonacci extensions on it. $342.23. So we broke past the first extension. That's this week. Not bad. 3 days in a row up. Amazon. Double bottom, snake breakout pullback. Yeah, I'm gonna step away for a second. I'm not feeling very good. They say I have seizures in my head every 3 minutes. We got a double bottom on Amazon. I mean, it's at a good spot too. I'm gonna sleep good tonight. I have that feeling. $227. I'm gonna go get my potato. I'll be right back. Maybe that's what I need. I need a good night's sleep tonight too. 6 hours last night. I got up and went to the post office at about 3 a.m. and seen a couple homeless guys fighting across the street. I sat there and watched it for a few minutes till the cops showed up. Some people, well, just pick them up. I mean, some of them are they just ain't going to ever make it in life. If I was president, I wouldn't call it a prison. I'd call it a home for the homeless, and I'd put them up. If I had to build 5 or 6 prisons, refab 5 or 6 prisons, and make it a playground with a hospital and a place to take showers, and a food court, an educational place, and rehab. But I see a guy this morning, man. His face was all munched up. You could tell he definitely had some learning disabilities.
and just take them in. I think they'd like it. Some of them would. Good stable bed with a 8x10 cell with a TV, and then open doors, and instead of have a door instead of a cage. That's what I'd do. I might. There we go. Breakout. 2110. That's a nice little bounce. $300 right there. 1790 to 2110. And that's 3 notches out of the money. That means things are high. Knife. What is that? SPX, 3 black crows. On the one, ooh, what the heck happened here? Look at that spike. Jeez. Wow. That's $600 right there on that. I got up out of my chair at the wrong time. 1770 to 2350. 2450. Damn. That probably really shot up there. My gosh. They didn't shoot up to 4,600, did they? No way. This is called 3 black crows with a hammer. If that holds there, if that body would have held above that, that'd have been bullish, but this is still bullish. It still might hold up there. That body right there, if that body holds, reversal. Nope. Now, look. Okay. 74.30s. $74.30s. $9. Oh yeah. $12.30. $74.30 to $12.30. I mean 9 to 12.30. There's your head fake. Okay. What happened here? We're back to 880. Double bottom. $8.80. $9.30. We're still above the 9. I think it's going to get wore out. It's going to get tired of this. You've got to move here. My new snack is lately has been the baked potato cooked in a microwave with butter and cheese. Got a hold, or it's a big drop. About ready to sell it. I'm out. $8. 8 to 8. 8.80 to 8. And probably a mistake, like always, when I sell it. I just don't like selling anymore at a loss. I just don't like it. When I don't have to. Fuck. Right there. Oh, yeah, it was 8. Now, this is really getting volatile. Getting real volatile right now. Be careful. There's my even. See? Every single time I sell at a loss, could have got out even or made money. Every single time almost. Anybody remember that Kohlberger slaying? That happened to them college kids. He wants to go to retrial because he didn't get what he was promised. I'd have promised him the death penalty myself. You got your wedge. You got a wedge. Still holding support. I'm so pissed off. I sold that, didn't need to. Oh yeah. I really like eating that baked potato, butter and cheese. It's better than chips. Is Magnificent having a good day? Did you get my question earlier, Magnificent? You ready? I'm going to see if you're smart. You ready? Okay, here's the question. What was the first item to have a barcode on it? What was the first item to have a barcode on it? Don't look it up. He's looking it up because it's taking him a while to figure it out. I should have said I want the answer within 5 seconds. Okay, we're at support. Get ready. Let's do it. 7 430s. Triggered. You ready? Triggered. Triggered. 740. Come on. Come on. 50 SMA. Come on. The crowd's going wild here. We're waiting for the 50 SMA. Now you could start your first entry here at $6.80. It's now $7.50. Yippee-yi. Yippee-yi-oo. Ghost riders in the sky. Come on. Did he answer the question? Some gums. Oh. Very good. Let's give him an A+. Did you have to look it up? Be honest. I know you're Jewish, so you got to be honest. Did you look it up? Jews don't lie. Some gums. You looked it up. He's going to look it up. Could be wrong. This was in my Poop to Learn book. Very good. What year? 1972. 3. Okay. Very good. One day may last forever. As we approach the 50 SMA, we talk about the sneaky snake trading strategy. Snake, breakout, pull back, boom. Who was the original strategic planner for that trading strategy? What is a snake? Poop to Learn. Washboardjim is the answer, correct. We're waiting for the 50 SMA patiently. As we wait, I'm going to give Linzoid a lullaby, if she's still in here. Francisca! I missed you. You know I love to say Francisca. We've really started to crystallize on this trading strategy. Okay, here it comes. Beware. The 74.30s are now at $5.90 to $6. Let's go ahead and get this in here. Patiently waiting. Patiently waiting. Right about now. Get ready. $5.90. $6. The crowd's going wild. My eyes have seen the coming of the terrible swift sword. We got to watch this candlestick right here before it hits that 50 SMA. There it is, right there. I'm going to take the risk, for I know what I'm doing. Hallelujah, I'm in at $5. Let's let it ring all night. Ooh, let's go, baby. Ooh, what is that? That don't make no sense. Can anybody read that? Shit. Oh, what am I doing there? Oh gosh, $4.90 already? Oh. No. I was up. Let's go back to who? What's your mouth? Come on now. I'm not the one that likes to... Oh, that's a beautiful run right there. We're back to my support on SPY, where we started this morning. That bottom. So that's a head and shoulders. This is the head. Or yin yang. These 74.30s. Yeah, it looks to me like we could drop down to the 200. Big C. Now that I look at the big picture, we'll see if we break here. If we don't, I got to get out of it because I think we can hit the 200. If I get this out of this trade, I'm going to sing I Got Lucky. Just for magnificent. Yeah, puts might work. By behind. I need to learn that song because I know this guy that sings it. I think I can do better if I really get focused and dialed in. Come on. I'll be your huckleberry. I'll be your huckleberry. We got a triple bottom. I'm kind of at a squeeze. We're in a flag. This is a bull flag. That's a bull flag. Get out of here. Don't ever come back. Up. Like a shit. Oh my. So this is called a snake, folks. This is a bull flag. Prove it? Do you want me to prove it? Bull flag. Not bullshit. But we got to take in consideration of the vibration of the gyration in the semitation with a relation. But that's called a bull flag. Fauci took the fifth. Did he really? Oh my God. He is the most disgusting man I've ever known. All my liberal friends back then, he's a scientist. Science, science, science. I really think they've just got one brain cell. I can't believe I hung around with my liberal friends all them years. Now I can't stand them. Okay, this is it. Big C, do or die right now. Do or die. Do or die. You said put. I'm not out of the trade yet. I'll take the Fifth Amendment. You know, I didn't make millions of dollars. I'm just glad they didn't find out that I created AIDS. I'd really be up shit creek. I wonder why they don't talk about AIDS like they used to, with this fluctuation of homosexuality. Yes, sir. They're pricey. Now I'm up $40. Should I sell my contracts? Yes or no? I'm up 100. Uh-oh. I called it. Didn't I, Big C? You still doubt me? You still doubt me? $640? Huh? I think I should go ahead and sell it. 3 white soldiers. Or should I hold it? We're in the same situation we were in earlier. I have 2 calls. My name's...
We have 3 white soldiers. We have 3 white soldiers. What do? You scale out and you hold 1. When it consolidates and pulls back, then you want to get back in. If you're a true scalper, like Washboardjim. I was born in Sacramento, California. Moved to Missouri to raise worms. Noticed the fishing was good here. 8 years old, I almost got bit by a rattlesnake. Now I'm 65. I was told to be dead by 20, and I still lived. The doctor said, Jim, you'll be lucky to make it to 20. You have a brain tumor. And I told Dr. Fauci, fuck you.
Dr. Fauci was my doctor when I was a kid. He tried to turn me into a woman. Look at that knife on that. I mean, you can't trust nothing. Once it hits a resistance, tweezer top, boom, back to a double bottom. Snake, breakout, double bottom. This is it. This is it. I'm getting back in 370. I took this one here to 6.60. And I'm back in at 370. What time is it? Still time to make money. $420, Randy. Great content. I used to be an actor. I played in many plays. Godspell. Shakespeare. Romeo and Juliet. In the Christmas specials. I was in every one of them. We're at $4.90. You can make a business decision. I called the snake, breakout, pulled back to the previous resistance, jumped in the trade, created a hammer. $4.90. If you ain't got this concept yet, I'll talk about it every time. Snake, break out, pull back to the previous resistance. Then you got to look at the candles. We got a hammer and a spinning top with a tweezer bottom. I think we can go higher, but you don't know. We're getting close. We're getting in that volatility stage of the day. So I'd probably take profit. Or leave one, but I'm using the 5 minute, 1 minute, 1 minute. I'll use the 5 minute. Let's see what we got on. I did earlier, or was it the 2 minute? 5 minute, we're at the 21. So we have to hold the 21 on the 5 minute, or we tanked on down to a triple bottom, which is right about in here. We had a tweezer top on the 5 minute. So the only thing holding it up is the 21 EMA. So I got one contract at 370 and sold 2 of them. I'm going to set my alert right on that. So with that body that can't, oh, there it is right there. 340. Okay, I'm in. I added on 350. 370, and I got one at 370 and one at 350. Look at that. I'm out. 510. God darn this. I'm telling you, it's so easy. Oh, fuck. Unbelievable. That was too easy. Holding the market down. 530 now. You want to see the girl that I had a crush on when I was in high school? Wow, look at that. No, 880, 860. $600 I left on the. Okay. Okay. I got a problem. I got a big problem.
One hug, 2 kisses, and my heart. Coochie girl.
Ooh, coochie coochie girl. Hoochie coochie. Hoochie coochie. I don't need a woman to satisfy me. Hoochie coochie. Hoochie coochie. Hoochie coochie. No, I don't need it. Oh yeah, yeah, the damn things are running. I'm having all fun. 1250, baby.
Two kisses and my coochie girl.
Oh no, no, coochie coochie. 1310, man. That's a sin. Coochie coochie. I'm gonna tell you. Coochie coochie girl. Coochie girl. Ooh yeah. Coochie coochie. Bang bang bang. Bang bang bang. Yeah, look at that, baby. Now, Big C, you want to say you're sorry to the washboard? Do you know what we bounced off of, Big C? The VWAP. The VWAP. 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 Double bottom at the VWAP was called by Washboardjim. The singing day trader. Man, I tell you what, I wish I held the 510 and they went to $13. I don't think you understand. That's $1,600 I left on the table. No. And I took it on the 1 minute. And if I saw the VWAP over here, I probably would have stayed in. But oh my God. No. Okay. Well, you missed the train down and you missed the train up, Big C. I at least got the train up and scalped the train down. Are they pushing it? They, you know, I'm going to tell you here right now. This worst guy, he's 5 times smarter than Fauci. I mean, Fauci. Powell. He's probably 20 times smarter than these shitheads on CNBC. Rate hikes. Why wouldn't I? Left the interest rate unchanged. Did I not say that? Exit idea. Right to resistance to the penny. Unchanged. So I'm gonna do something. It's gonna piss off somebody. And I bet you don't know who it is. Start off with the word for. Many months, all you have been talking about is rate increases. As a retail trader, that does not make a crap of SEN cents. You gave a green flag to one of the worst presidents ever. Biden. For many months, y'all have been talking about this rate increases. As a retail trader, that does not make a crap of sense. You gave the green flag to one of the worst presidents ever, Biden. Looks like a short squeeze. Yes. They've been hyped in this rate increase for months. Can you imagine what? And I've been arguing with them for months about it. So you people are idiots. I explained it real well yesterday. It makes no sense to me if we repeat history. So it only leaves one answer, that they're very biased and they're rigging this market. They'll go back to CapEx now. After this is over. Well, earnings have been excellent. That's CapEx. I can understand Meta now. I mean, but I can also understand that Zuckerberg's not stupid. Probably not as smart as Musk, but oh well. I should be listening to their, always listen to their excuses.
But I think not the end of the story. And if I could, I did want to ask, not forward guidance, but looking forward. Traditionally, a Federal Reserve chairman uses the Jackson Hole summit as a sort of a reset of monetary policy. Well, how do you look at the speech that you're going to make in August?
I look at it like a blank piece of paper right now. I have not begun consideration with the incredible team here what would go into that document. I think you characterized it correctly. Historically, at least from my first tour of duty at the Fed to more recent periods, it would be sort of a setting up speech more often than not of what was going to be happening.
This guy's a better speaker already.
Any judgments on that, but those are judgments we'll have to come to. If I could, in the high mountain air in Jackson, Wyoming, I'd like to also frame.
He reminds me of Jerry Lewis. Jerry Lewis.
There's a tendency, especially with the proliferation of meetings and press conferences, to get caught up in the myopic. Did you do this by a quarter or do that? Ultimately, whether we deliver on price stability matters some, the decisions we make in 6 or 7 or 8 week periods. They matter more. What are the big questions? What's really happening with productivity? What's really happening with demographics? What's really happening to the global economy amid the shocks? Haven't made a decision whether it's going to be a big picture speech or whether it's going to be a more traditional setup for all the action we're going to have between September and December. I will tell you one other thing that I am doing between now and Jackson Hole. So I'm checking with those task forces.
You wouldn't believe.
My first principle of establishing a task force is find the best subject matter experts anywhere in the world and put them together, especially put them together with other people who might disagree with them.
Okay. SPX calls I had down here for 7,400 strike at 920. I wanted $3,000 out of them. You know where they went to? $5,000 a piece. From 920. The 730s went to 2,600 and I got out at 510. Got back in and sold them again. $5, $10, and $6, something like that. No, yeah. I thought I got back in it, but I didn't. Got back in here at 5.10, got out. Some bitch. Randy, 51.24 apiece. Randy. 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 Oh. Jimmy said we were looking good. Didn't I say we were looking good in the market on all the charts today? And I was very bullish and had started getting anxiety. Oh. Tesla. I don't know what to look at Tesla. No. I've scalped it twice. Oh. Tesla. This is the worst day of my life. Oh, God. Oh. Oh, you're mean. You are a bad man. I am the best trader of all, ain't I? I'm the best trader of all, am I? They went to 545. No, they were at 545. Oh, they're up that. They're up $1.50. The ones I had. Magnificent, I want you to do a poll. Is Jim the best trader that you ever met or the worst trader you ever met? Knowing him, he's probably on mute again.
In the markets about what the Fed would do at this meeting. To some extent, you might think that's what you want to see. But my question is about, is there a point at which you would not want to surprise the markets if they were pricing in something with higher certainty that was opposite of what you were intending to do?
Now, this is a stupid question. Okay?
Yes, so it's a good question.
No, it's a stupid question.
Surprise is not the objective function.
Exactly.
Surprise is not what we're solving for. We have a clear North Star, what we're solving for.
Okay. She says the market prices in expectations. They don't ever trade like that. They've been doing it to us for 2 years on expectations. From the tariff talk, I mean, I went down the line. Recession talk. Did they bake in the recession talk? I mean, the market is not as accurate as it used to be. They aren't that bright, and they can't price in crap. We had a ringleader get in there and pull this market down on purpose. Now we've hit all these 200 SMAs and EMAs, and we're going to start bouncing. They've rigged this shit.
That's a short answer to the question. When some people that follow the Fed say, well, we don't want your forecast. They don't want your data. We just
I don't want it.
Action function. Part of me hears what we really want to.
I don't need his forecast because I read charts. And if these traders, institutional traders, were real fundamental traders, they would be bullish as they can be on this market. But they're not. Because of the great earnings we've had. Now it's out expectations. Oh, well, it's too much CapEx spend. I don't care about that.
Or she sees underlying inflation moving higher, he or she is more inclined to tighten policy. Again, when you've achieved the other side of your mandate and you see
we got a head and shoulder resistance.
Falling.
We got a head and shoulders resistance. So that's what I get really pissed off when CNBC or such as, well, the market's priced in this, and it's priced in that, and then it's never correct. And then what happens? Well, the market's pricing in this now. I don't think there is. I've traded 22 years straight, and I've listened to all the rhetoric. And they have a sense of history constantly repeats itself. They've mentioned the dot-com era. I've mentioned the EV sector. I mentioned the cannabis sector. I mentioned the Bitcoin sector. Where they tailgate in sectors and pump them up. The tech sector. This is different than the dot-com era. This is different than all them other sectors that popped and they trailed and they pumped and they dumped. AI is a revolution of change that's going to change everything we do and make it easier. I'm not scared of it. Now, if we don't keep, I mean, we got to be able to maintain it, make sure that it doesn't get any malware or anything. But it's a whole new. We don't even know. I mean, 10 years from now, it's going to be unbelievable things that you're going to be able to do and say with just a clip of your finger and a speech. You don't have to. And then, I mean, I think it's just the biggest thing ever, but I could be wrong. Not as wrong as these guys.
To achieve that, I'm looking at a broader set of inflation data than PCE. So without sort of fully revealing my cards, I'm trying to understand, like my colleagues, what's the underlying generalized change in prices that are happening in the economy. It is not a perfect science. I might have said 42 days ago, I've got a task force for that. But we have a data project that's trying to look and see whether we can't separate the noise from the signal. And so if you would hear a message from me, yes, I care about what the PCE prints are. I care about what the contributions are from CPI and everything else. But my lens is broader than that, even though the remit is quite narrow.
Michael McKee from Bloomberg Radio and Television. I'm struggling a little bit with some of what you've said today, and maybe you can help clarify this. You've said over and over again that your job is to bring down prices, to get prices stable, to hit your target, and that you will hit your target. The market says you're not there yet because they've raised rates, but all you've talked about today is talking about it. And it's not like members of the committee weren't there before you talking about it. So I guess what the American people might be asking is, what are you waiting for?
Yeah. So, believe it or not, this press conference is not all I've done today. We have spent an inordinate amount of time,
Yeah, you
last
jackass.
2 days, 2 weeks, looking at our monetary policy strategy, evaluating our tools, thinking hard about the sources of data that we have at our disposal and we wish we had. We've also thought hard about the period ahead. What among these questions?
I'm not confused. I didn't want the guy to make the decision right out of the gate. When I walk into a job site, I look straight into the guy that's interviewing me. And I tell him, I've got 10 years experience at this, but I'm wiping that all out. I want to come in here and follow your rules so I can figure out how your store generates, and then I can work into that. That's how good I am. I'm not going to come in here and be the boss and start pointing things out. So dude hires me on the phone from Hawaii. He gives me 2 calls. He says, you're hired. I'll ship you out here. I'll ship your truck out here, and I'll put you up in a place till you find a place. So I get in there, and we had the understanding that I was going to be the manager of the warehouse, but I did not have the understanding that I was going to go in there and fire people. So he sticks me up there, and I got 100 Samoans surrounded me, and Asians, and I'm the only white guy in this warehouse. And he says, I brought Jim here all the way from Missouri. He has the right to fire any of you. And I'm going, what did I walk myself into? And all them guys, I just kind of wiped my skull and looked at him. So I had to go around, and people didn't want to talk to me. I had to go around and start having fun and joking like I do for them to start to love me. But it put me in a very bad situation. And I wasn't going to go in there the first day and say, we're going to move this, we're going to do that. No, you can't be taking a break. I mean, I sat there for 6 months before I started giving orders.
To do a far better job in delivering. And if we get the answers wrong, we have a problem. The comfort that I can give you and your listeners.
Got to understand the job.
We're the decision makers.
I have no misunderstanding
with it. The board
it.
of the Federal Reserve and the members of the board and the FOMC, we will be the consumers of the outputs from 5 different committees. The judgments we're making will be informed by, but not at all determined by, these outside groups. My theory of the case in establishing the task forces were to pick people with extraordinary talent, depth of expertise, and a divergence of views inside every committee, so they too can have a family fight. This is not outsourcing to people that aren't known and haven't been vetted. This is seeing whether new ideas can catalyze a broader, better, more informed discussion inside the room. And I'm very confident that we're going to be able to do that. I am impressed by the credentials of these 15 people. And full disclosure, I've known almost all of them for a very long time. And I think they're going to give their best views on the subject. But ultimately, these are decisions we're going to make, and we're accountable to our oversight committees and to the remit Congress gave us to deliver.
Good answer. Same answer I gave.
Hi, Ann Saphir with Reuters. Nice to see you again. So I need a little help here too. You've said repeatedly you have no tolerance for inflation, and yet we are seeing above target inflation repeatedly for 5 years and through your term so far. And sure, you have no magic wand, but you have not taken action. You just gave us a little peek at your reaction function as well. You said that if underlying inflation is rising, that you would tend to think that you might need to tighten. And with the exception of the most recent inflation print, that is what we've been seeing. So could you explain what you mean by no tolerance for inflation and what you plan to do about it?
Sure. So, Ann, I hear from you what I hear more broadly from households and businesses. Impatience. Deliver it already. This is not an excuse. This is a fact. This FOMC, this board has been in business for 8.5 weeks. The patience, the impatience that households and businesses feel have been going on for 63 months. We are on the job. We will deliver. We are focused like a laser on making sure we can do it. But the suggestion that we're going to be able to do it with our magic wand is one I want to disabuse you and everyone else of. But the discussion in the last 2 days give me more confidence even than I had 8.5 weeks ago. This team that we have at the FOMC, the support that we have from board staff, and the new hard questions we're asking, we need to resolve those. And as we resolve those questions, get smarter on those, we're going to deliver on the remit. You don't have to take my word for it. If you look broadly at market prices, they are certainly not saying all clear, but they are working in concert to keep us on our toes. And they have tightened financial.
I don't know where she's coming from.
Intra-meeting period, and that has given.
But I'm hearing that inflation is kind of at a standstill, and he got handed a real bad plate. And I think Powell was the worst that could have ever been.
From that judgment, how does that affect you when you come up on the September meeting and markets are seeing a near 100% chance of a rate hike as they see now?
No, we don't.
How does that feed into your decision making and your thinking?
Oh God!
So we're not going to be constrained by market prices. We're
Exactly.
not going to be constrained or take verbatim from what the market's doing. But I think it's useful and to understand that markets can be a very good source of information, not a determinant.
The market has a big disconnect with the private sector. The private sector and Wall Street are two different things. If he pays attention to the private sector, not these institutional traders that are trying to manipulate the market, they're upset because they didn't get their frickin' rate hike, and it wasn't going to come. So they're all confused. I'm not. You don't want to raise hikes during a war?
We'll go to Brian Chung for the last question.
Hi, Chairman Warsh. Brian Chung with NBC News. So you said you'd be open to having press conferences when there's news to make. So today, no change to rates, no forward guidance. For the average household, I guess, what was the news today?
So
low blow.
Apparently it was news that I had a press conference. Let me just see if I can offer some clarity on that. Between now and year end, my predecessors and the Federal Reserve committed to press conferences this year. I'm committing to press conferences this year. That might be news to the people in this room and of no particular interest to your viewers and your readers back at home. What I can offer as assurance
Cisco
is that the Fed's on the case. that
Workday's up nice.
feels better about this board and this committee's ability to deliver than I did when I showed up here on the first day, and I showed up pretty confident. I've been heartened by the reception that I received. No doubt in some of your commentaries today, you'll talk about a divided Federal Reserve. Well, that's not the feeling I felt the last couple of days and the couple days before it. What I felt was a group of professionals, all with different perspectives, different views, different judgments, but eager to roll up their sleeves and have a family fight, and eager to reform the...
Okay, I'm done. I'm just not going to listen to that criticizing. They were completely, Wall Street was completely wrong. And they won't sit back and admit it because they're so strong-headed. I feel kind of vindicated. Let's see what these guys say.
Prominence from members who wanted a quarter-point hike. Chair Warsh saying the economy showing impressive resilience, inflation remains elevated, and that the committee is resolute to deliver price stability. I'll take you to the markets here, show you what is happening here. Rates did move a little bit lower. You did have the stock market move a little bit higher.
A little bit.
It's lows
back to the top, you idiot.
Dow, that's down 650 points. But bear in mind, we were down by more than 900 early in the session. Maybe a tell on the move in rates is the move in the NASDAQ, which has now gone positive, albeit slightly, but nonetheless, it is now green and has been trading in the red for the better part.
You know what, you're a puss.
Now let's bring in Jeffrey Gundlach. He is the CEO, CIO, and founder of Double Line. He joins us now from Los Angeles. Welcome back. Good to have you.
Now I remember this goofball just a few hours ago.
Nice week off last week.
I did.
Almost guaranteed a rate hike. And he had that like dumb look in his face. Now look at him. He's hiding it good.
Rates, but there was still plenty of drama in what Chair Warsh talked about. What was your reaction?
Well, he said the word family fight a lot of times, and he also said 2% very, very definitively. I gave him a little bit of pushback last meeting when he talked about the left of the decimal point has to be a 2, and now he's...
Yeah, we're at war with these guys. We got a double bottom here coming. Finally might have our trade. Snake, breakout, pull back, double bottom. Where are we here? Oh, August 21st. Oh, it's Tesla. Wow. SPX. The 7420s. 7420s at 420. 410. Okay, get ready. Oh. 7410s at 410. We're at the 200 EMA. He can hit the SMA. It's in 420. at 370, 380. If we put 80 for my first one. Sheesh, $3. Not good. Get ready, we're gonna add another. We're at the 200 now. Got one at 380 and two at 205. So the market priced in a rate hike. You sure about that? It didn't make no sense to me, guys.
And what it was showing the markets, he phrased it saying the market participants are learning to play the call, not the referee. This is a change for the better, and he expanded a bit there as well. But it was very interesting conversations in the lead up to it. I had several guests imply to me or even directly say that they thought this would be a part of that sort of teaching moment.
So are they going to carry on like they think that they're right? And are they going to keep on criticizing worse now because they think he's a dumbass? Because it didn't go their way? Or did Warsh outsmart him? That's going to be the speech. And they're all going to scratch their heads. I mean, I've seen it over and 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 over. They're hardly ever right. That's why I play the devil's advocate, and I'm so good at it. And the same thing with CapEx. Soon that's going to be out, you know, maybe another year of that shit until Trump's out of office. Then all of a sudden everything's great. I'm going to have to jump out of this stock if this thing don't turn around right here. I'd have a ball with these guys. Yeah, I feel pretty good about everything. They ain't been fun to listen to lately, I know that. Tesla's pulled back to support. Triple bottom out of a snake. Look how beautiful that is. That is just pure beauty. That's a beautiful chart right there. That's really nice. $11.20. I'm way too far out of the money. I'm going to take a loss. Yeah, out at 105. Swing low. Now it's at 70. 65. So I wouldn't last very long in these institutional spots. They were coming up to me and said, "How'd you get 75% profit today? We're lucky to get 12. That's simple. I don't listen to any of you. I don't listen to any of you. We're at a support, and I told them they were wrong, so I wanted to take it and put it in a sweet, sweet song. Well, for months they've been talking interest rate hikes. For 4 years all we heard about was tranny and dykes. Cutting off children's nuts, giving men some boobies. The world's gone crazy. We didn't have but one tranny in high school. Now about 40% are trannies. What happened? Obama was gay. He liked it that way. Well, I'm called it right, they called it wrong, so I put it in a song. Now they're questioning the crime. Don't pay attention to the propaganda. Whoa. Well, you got a triple bottom and an inverse head and shoulders out of a snake. Oh yeah. We got 30 minutes to take the trade. At the 7,400 strike at 290. 290. 7,400 strike at 290. Lotto. 7,400 strike. I know they've been really kicking Russia's ass here lately. Come on now. Let's hold this. What am I doing? Trading a frickin' SPX on the... Oh my. I need help. I need big help. Shit. 7,400 at $3. Come on. 290. I was looking at the wrong chart and I took the SPX trade. I'm a fool. Let's see what Marley looks like today. She's got a potato sack on today. Oh God, she's a mermaid. No, I don't know. I kind of like that. I love you. Wow. That's a cool looking dress. It looks like a mermaid dress. Oh boy, I fucked up there. Well, there goes 190 bucks. Shit. 732 again? Up, down, turn around, pick a bale of cotton. Well, the preacher called me last night and said, where you been? I had some friends that were on Grand Ole Opry. They had a video of it. The band that I played with. I don't know if I can find it. I don't really like the song. Here's a chick I played with.
It's the third time now I've told myself I'm leaving. No matter what I do, can't seem to win. All these questions in my head seem right to ask you, but I found I'm talking to myself again. I can't count the times I've flown across this highway, alone with all the rights and wrongs. I don't know just when it happened, but everything's changed. I don't think there's a place for me anymore. Go to bed each night and rehearse. Morning once again, I've lost my nerve. Like a single shoe left in the lost and found. You moved on, and I'm still hanging around. Feeling high the times I did enough to please you. Disappointed breaks me to the core. That's too many ups and downs for just one person. I don't think there's a place for me anymore. I go to bed each night with everything rehearsed. In the morning once again I've lost my nerve. Like a single shoe left in the lost and found. You've moved on, and I'm still hanging around. It's been hours, but my head is getting clear. The wind sweeps through the windows and the doors. I can finally see there's no point in pretending. I don't think there's a place for you here anymore. I don't think there's a place for you here anymore. I don't think I can see a place for you here anymore.
Good job, girl.
What? Well.
Knife. More knives. I got out of that, so I'm not hurting, but it's now 40 cents. It's way out of the money. You got your 731 double bottom here. So I'd have to move it up to 73.60. That was a good eye there. I have to give it to you, Big C. You've been waiting for me to tell you that? Magnificent, give him an A+. Look, he's not listening again. Molly Healy when we played with the Ozark Mountain Daredevils. I had a time of my life. Got to play with one of the best bands in the world. In the world. In the world. In the world. It's 7:31. We got a doji spinning top, and we got 15 minutes. I don't want to. We got 3 black crows. Now, see, I like that. 1 minute compared to the 5. I like this. I don't like. The trees are bottom now, so I would take that there. And I would have took this here. 39.43. Oh, that's 2 dirt spy. Shit. Ugh. Yeah, I lost on that one already. 1 minute. One minute I would have took it at 37 instead of 43. 38. I'd have took it at 38. So I'd have got in lower than the 5 minute. Then I'd add on right there. And I hope the best. $390. They were at 270. What? That makes sense. Huh. Something ain't right. Oh, I moved them up. I got you. Yeah. Bad trade. 7,400s at 20 cents. I got out of them at $1. Lost $1.90. 190. So I don't want to trade no more. It's 2 bad trades in a row. Microwaves were a mistake. Poop and learn. The microwave oven was invented after the scientist noticed that the candy bar in his pocket melted near radar equipment. He realized the waves were heating the chocolate and tasted them on popcorn next. It worked as well as the kitchen microwave. I can't read. I pooped out. Tired and pooped out. Got to break the 9 before we become bullish. Intel did more. No, it didn't. We're still good. Intel. Triple bottom tomorrow. You want it to hold? NVIDIA triple bottom. SpaceX back to 110. Apple. Now had a good day. From 91 to 118. Netflix, got to keep an eye on it coming into winter. Now I'm kind of thinking, someone said something to me the other day, said Hollywood's over with. We got AI now. And you know what? I think I'd enjoy AI more than I would Hollywood actors. That way I know that they're not so opinionated. Some makeup actors.
Yeah, my politics is human trafficking and drug dealing. Make sure we got open borders and we don't need no ID to vote.
Yeah.
IWM new law.
Well, days are long for me. We've got 9 minutes. Soon I got to start working on my property for retirement. I want to build something just to live in, a little shack. Because I'll probably, 2 more years, I'll be out of this country. Maybe in Hawaii somewhere. You're welcome. But you know how I feel about everything. I let it out pretty good today. Last couple weeks. They say the market priced in something that hasn't happened yet. I don't see how they can do that without burning a bunch of people. They need. I sent a message to Trump on 2 different platforms about how these people are manipulating the market. I'm gonna do a 200, probably not tonight. I'm gonna do a 200 SMA video. 100, I'm gonna go through some tickers and pick out about 5 good ones. I want to see where PLTR is on the 200 SMA. See, we're at the 200 EMA. One more dip down to 107, 107. But I like it here a lot. Right there. I like where it closed right now. Man, I'm real tired. $100 for the video. We're at the 50 SMA on Marvell. On NVIDIA. What was that before? Google? The 50 SMA on Google. Marvell's dropped almost $10. We're coming down on support on Marvell. 63. So they're saying the other day that AMD is going to take over PLTR. Tops. Huh. Man, I really need to get some sleep. Watch IBM here. Yeah, I had IBM on. Or was it, no? Was it IBM? I thought I did charted up IBM. Yeah. IBM's at the 200. I gotta get a new mouse. Randy, IBM. Mm-hmm. Okay, like I said earlier, these guys used to come out and tell you when they thought we were out of support. And that usually was at the 200 SMA and EMA on the weekly and daily time frame. That's all you need to know right now. That's all you need to know right now. Go through all your stocks. See if they're coming close to them 3 moving averages. This one reversed off the 200 also. IBM. They're going to start to upgrade it. Got a buy rating on it. So yeah, I mean, I'm finding a lot of bargains. And this is what I've been saying for months. This is what I want. Don't be surprised now that the Fed is over with and they got caught in a big lie and they were adjusting the market to pull back for a rate cut, for a rate increase, and they didn't get their frickin' rate increase. So what's going to happen after that? If it was baked in, they were baked it in wrong. In all reality, we should bounce up. But these people are different than when I've traded with them before. They're cruel. So I'm going to get out of here. I'm enjoying it. I mean, I ran that one stock all the way up and then it went to $5,000. Can you? $600 entry, $700 entry. Boom! I said it was going to go up, but man, I got so up there so high, I had to get her out of it. Okay, well, I'm going to get out of here. I want to say thank you, everybody, and we'll see you tomorrow.